Connect, people connect. Came after so long. One lark. I don't know, so it's open. Okay. So let's continue. I came after a long holidays. It's not that long. It may be long for you. It was not long for me. Okay, I was in India. I went to my home. I did a lot of stuffs which I was supposed to do, and I did it. I came back. I'm happy, and I will make you happy. So let's get just started. It has been so long that I haven't said this. Just let me take a sip. Yo, ladies and gentlemen, please welcome to the brand new live stream of the Cheesybit, Zbit and ZbitX platform. And to all those people who have joined new or something, you might have seen me on these YouTube videos or somewhere, and you might have known like, where is this guy and blah blah blah. Rajesh, I'm like, hey, where have you been? I'm so happy to see you and blah. I'm happy. I am happy as well to come back on this live stream. See, my voice is not coming out that much, but I'll hope that eventually we have 4 hours, so it will come. I'm just getting used to again speaking with you, all of people, speaking on this camera, looking at the content and every of those things. And for all those people who don't know me, my name is Yash Pawar and I am a host over here. Don't consider me as your teacher, don't consider me as your like a guide or something. I am your friend who is here to help you in each and every support, each and every level where you need my guidance, where you need my help, where you need something to figure out, something to solve, something to troubleshoot or any of those things. Okay, I am here for all of you people to have any doubts regarding the crypto world. Okay, it can be the news, it can be how to do trading, what is this, what is blah. And if you have any doubts, anything in the Zbit app itself, because for the new people, I want to tell you, if the people are joining here and they don't know about what is Zbit, what is Cheesybit and every of those things, let me tell you this one and very simple thing. Okay, so I am hosting this live stream at 3 different platforms. One is a Cheesybit, which was the original account of us where we started doing the journey of making you a financially freedom person, to take you from the scratch and make it to the advanced level of learning and adapting and having an enhanced skill of trading. Okay, this was the first and original platform. That is a Cheesybit. The next became the Zbit. Zbit is our crypto exchange platform where you can start your crypto exchange, where you can trade exchange currencies, and so not in that one platform. It's similar, like if you don't know regarding crypto exchange companies or the apps or something, what they do and everything, we are very similar, like not exactly, yeah, similar is a good word. We are very similar like the OKX, Binance, and so Bybit and so on, which are there for all of you to available to make your crypto exchange happen, or to trade, or to make any like holdings or sellings or anything related to the cryptos. I'm not talking about the stocks, I'm not talking about the forex, I'm talking about the specific digital currencies which is booming for so long time. It is booming like it has been past 6 to 7 years that we have seen the constant growth of digital currencies. And yes, not every currency can grow. Very like simple it is, like not everything is meant to grow. It's very hot here. I'll just turn on the AC and come. Okay, just 1 minute. Okay, AC is on. I'm back. Why there are so many wires? Okay. Getting adjusted to it. Okay, it has been so long that I haven't done this, so it's getting adjusted. So, like I was talking about the digital currency, like we have seen from past to 6 to 7 years that this cryptocurrencies and every of those things has been going on in the upper direction. See. You are hot as well, Muskan. Thank you so much, Muskan. Thank you so much. Thank you so much. The Dubai is very hot. Dubai is very hot. I am not liking Dubai. I saw rain after 6 months. I have seen rains. Now most of the people will like, yeah, that is the rainy season. It will take 3 to 4 months and blah blah blah. How are you? Long time no see. I am good. Thank you so much for asking, people. Thank you so much. Thank you so much, everybody. I am good. And if you see me doing something to my stomach, it's just like paining. I did a belly piercing, actually. Yes, I did a belly piercing. So sometimes it pains. So don't think like I'm doing something wrong. It's just like that piercing might hurt. So I am totally fine. I went to my home. I did a lot of stuffs. I enjoyed every bit of it. And it's like, see, in infrastructure way, yes, the India is not that great for infrastructure, but home is a home. When you eat your mom's food, when you wake up and see your friends do shits and all of those stuffs. So yeah, it feels great for that. And it was very hard for me to come back. It's one of those situations where like nowadays I think like I should not work. I think I just should find one bag with full of money so that I don't have to work anymore or something. It's just like the vacation phase I am in, like where once you come out of the vacation, you don't want to work. Why we are working? Why I'm doing this? Why do I have to wake up in the morning and then get up, get bath and blah blah and come to work? I am in that phase, but it will go eventually. It will go. I love to come on live streams. Okay, I love to talk to you. I love to be on the screen and every of those things. That will be constant. That will be constant forever. But it's just like I am in still in that vacation head. So might be little energy might be down. But other than that, I enjoyed. Thank you so much, Muskan, for asking how was I. I am very fine. I am refreshed. That's all. Yeah. But I felt happy when I came to Dubai, when I saw those big infrastructures and everything. That is good. But other than that, the weather sucks. The weather still sucks. It's still hot. It's still very, 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 very hot. They have even gave the new rules, if the labor people who are working outside, not in the office, but outside the office, maybe for cutting the trees or whatever the stuffs are there outside the buildings, where they have to be under the sunlight and everything. The new rule came that by 12 to 3 they won't be working, because that hot Dubai is. You must have seen in your school, whenever there is a national anthem or something. So the students are standing, and one of those will like faint and all those things in the sun with the sunstroke or with the immense of a heat. Their body cannot tolerate or something like that, and they will fall faint. Okay, so those things happen here as well in a large amount because of the large amount of immense heat. But that is totally fine. That won't make a difference for me because I am in an office where there is an AC. So, like I was telling your people, like this Zbit is a crypto exchange platform where you can start trading today, and there has been a lots of good rewards. And really sorry for this one very small thing, like I'm not knowing the all, like see, they made a little changes when I was not here, so I am not aware about this stuffs, what kind of rewards, what kind of changes, what kind of things they have done for the users, which I promised you that they will be giving you. So if I went to India or what, Ramisha, yes Ramisha, hi, hello Ramisha, and went to India or what? Yes, I went to India, I enjoyed India, I loved India. Yeah, it's the same thing. Like if you earn outside currency, like not the India, like if you work outside the currency and then you come back, then when you're spending money, it feels good because it's a lot. So leave those things. But yes, I went to India. Nice you came back. Thank you so much for everybody. Thank you so much everybody for joining this live stream. Thank you so much for welcoming me. Yeah, this is my first live stream after a long India. Yes, I went to India and I saw rain. I played in rain, I got wet and every of those things. I was missing rain a lot, but fine. Let's get back to our business of telling you regarding the Zbit platform. So see, I heard that there was a play. I know. There was but I want a video of that one person who actually jumped out of the plane. And why was he only that one person who jumped out of that plane and rest of it didn't? And at what height did he jump? From what place did he jump? And where he landed, how he jumped, why there is very minor, like when I saw the video on that Instagram, like there was a very minor injuries on his head, like he was walking, his hands and legs were walking and everything. So I thought, like, at what height did he jump from? Like, did he jump from very low height or high height? Because if he jumped from high height, then obviously there would have been fractures or something like that. And how, yes, there is one thing. You should be aware, you should listen to what that cabin crew tells you regarding the emergency exit door, how to open it and every of those things. Okay, I know how to open it. It's just like you open that plastic thing, then you grab the handle, you pay, you can put it out and then you jump. That I know. But I think, I really think that whatever happened to Air India, it was not Air India, okay, it was Boeing plane, the company who manufactured it, because Air India has 2 to 3 manufacturers. It's not just one Boeing, and Boeing is not meant to manufacture a commercial plane. They are more into the fighter jets, the military planes and all those kind of stuffs. But yes, it's a mistake, it's a sad news, but I love that guy, bro, who jumped out of that plane. You need a guts to do that, bro. And I'm really happy that, see, I'm not happy. How should I put in that sentence? I'm happy to hear that one person survived. I'm sad to hear that the rest of our person didn't survive. But I'm also this one thing, like, we should protest. We should make one arrangement for the passengers. Like, at least at situations like this, we should have parachutes rather than having, like, most of the planes will have those airbags, like you should float above the water, and if the plane falls in the water and something, you should float. But we should have parachute as well, because not all the time we are falling on the water. Most of the time we are falling on the land, on the people. So I believe that we should have the parachutes in the airplane for the people. At least for all of the people, like compared to all the seats, we should have everybody, because if we are giving you money, the trust, like you should make us go safe from one place to the another, then you should take care of our safety as well, rather than just giving that life jacket which is meant only for the water. What about the land? We are, hope you had a smooth journey. I had a smooth journey. There was turbulence, I hate the children crying in play. Whenever there is a slightest turbulence, the children will cry. I'm gonna, bro, chill. I get it that they are very small and blah 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 blah, but chill. And what about the parent? They don't even do. They're like, it's fine. They are not even doing that. There was one kid sitting next to me crying, and not even one time his father or mother said, it's fine. They're like, hey, chup. That's the only thing they did, bro. I was shocked. But how is the market? Did this plane affect the market in any way? See, the market is getting affected in 2 to 3 factors. It's not just the plane. Have you heard about what is happening to the Iran and Israel? They are having the constant fight. Like today, not yesterday, yesterday or today. Like I am not aware about their timeline, because the Dubai timeline, their timeline little affects. So yesterday or today, according to them, they fired a lots of missiles on the Israel, which will have an impact. See, whenever there has been a war, whenever there has been some escalations regarding the war is going to happen, or war is actually happening in the real time, there always Trump got irritated as well. Yes. So there has been all the time, whenever there is a situations of the war happening, we have seen that it affects the economy. It affects the economy in like the trading way. We will have the less trades at the war situation, because we are afraid of dealing with those routes where the war is happening, because of the major losses we may happen, or the life we are putting in danger, on all those things. Okay, so whenever there are 2 to 3 countries which are fighting, and which are like one of those major, not even major, but even though they are minor trading countries, like Israel is one of this very strong country. Okay, Iran at the other hand is not economically that strong, but as a military wise, yes, they are strong as well. And they haven't, what? Aditi says, oh my god, that love emoji. Who is this? Handsome sperm? Handsome, okay. Sperm. That's the weirdest thing I've ever heard. Handsome sperm. Damn. I won't even reply, okay? I won't even reply to that. But thank you so much. Missed your analysis. Thank you so much. Thank you so much, everybody. We will get back to analysis. We have 4 hours, okay? We have lots of time. We don't have to rush anywhere. Where have you been? I was in India. I fly to India. I went there for a little vacation. There were some functions happening in India where they called me for, and so yes. And Bakri Eid holidays were also there. So the thing like sperm, handsome sperm. You had so many options. You had handsome boy, handsome guy, handsome baby, handsome man, handsome, so many other stuffs. But sperm, you picked sperm, handsome sperm. Shit. So yes, like we were talking about the escalations of the war. So the Iran, they are at low point at the economy level. They don't stand in the top 5, top 4, top 6. But at the same point, they are having a very strong ethics, which matters at the war situations. Because even though you know that you don't have I don't want to talk about that. Okay. So same happened, whatever, leave those same thing. So whenever you are having an ethics, even though your economy is little less, you don't have that strong currency rate or any of the compared to the rest of the world, and you are still having a very strong ethics regarding the Israel people, the Iran people, they are having a support with the Israel's enemy. So this enemy backfiring, and then enemy becomes enemy, and so many things are rounding up on that. Yesterday they attacked the major cities, the capital of Israel, which is one of the things, like we whenever we want to attack to some people, we or the other country, they try to find the bases, like the air base, the military base, or some greater monuments of that country, but an isolated area. A country doesn't attack directly to the capital, because they are not, like, it becomes in the war ethics as well, because we know that a major of the innocent people is gonna get crushed for no reason, because it's a fight between the two governments, two political parties. It's not a fight between the innocents and innocents, because whenever you go to such countries, and if you get connected by internet or somewhere, they will always talk about this one and very simple thing: we are innocent. We don't want those country people to die, the innocent people, and this country is innocent people. They will be on this one common ground, that at least if you want to fight, pick a ground, go there, have a fight, come back. That's the thing which they would love. The people, I'm saying, the civilians, that's the mentality of the civilians. But as per the government, we are meant to be get pissed. Okay, we cannot help for that. We cannot, other than praying, other than like having a condolence for those family who are losing their life and every of those things, and attacking to the major capital. That was a very big irrational decision from Iran. I really believe that was a very irrational decision, because see, the major capital would have a lot of population, a lot of innocent people is gonna die, and that is gonna escalate a lot of things in the world. Because I have told you this one very simple thing: the trading affects in two ways. One is the skills, where you can enhance your understanding the chart patterns, understanding, and today we are going to talk about that itself. Okay, so our major topic I will tell you a little later, but that is our major topic. I will help you to understand this chart very simply and very easy. So other than that, there is a chart pattern analysis. There is what is happening just on the screen. Like, see, whenever we are doing a trading, what we get is this whole stuff, where you can see this graph going up, coming down, the red candles, the green candles, and all of those things. By analyzing this, we can have to find out whether the market can go up the next hour, the next day, the next week, the next month, or the next year. It depends on whatever kind of trader you are, because there are a lot of types of trading. Intraday trading, the person who enters today and exits today. They don't do the holdings. Like even I don't do holding. Okay, I don't do holding because of one reason, that the market is at $105K. It is at that highest point it has reached, where even if I'm doing a holding, I know at some point again the market is gonna crash, which is gonna make me have a loss. Like the very greatest point I told you, like when the Jan 2025 crash happened, due to the, again, same thing happened due to the war. It happened, the Russia and the Ukraine. Russia is one of those top country where there is lot of trades happening in that country, which can make an imbalance in the overall world's economy. Same thing is happening now at Israel, Iran, and Palestine. These three countries are lined up in the war situation, where anything can happen. Like their civilians and all those military things, they are unaware about what can happen the next, because of the Iran's very, I can't find a reason for you to attack on someone's capital, where you know there is no military base, or like some like military people are there, or some politician people are there. If you're attacking to the specific houses of the politician, fine, understandable. But at the same point, you are just firing the ballistic missiles, and it is gonna attack the random places in the capital just to create what? Your the dominance by killing the innocent people. That's wrong. So the war situation will affect our market again. That's why I'm not gonna do a holding right now in the market. Whenever I've told you this one very specific thing, at the January 2025, when the Russia-Ukraine war happened, like it was happening for a long, sorry, let me just keep it on silent. It was happening for a long period of time. Okay. But at the same point, the major escalation the Trump got elected as president, we saw a very slight up of the market. We were happy that because Trump promised us those stuff. Because Trump promised us so many stuffs regarding the crypto, and which he did as well. I'm not saying that he didn't do. Other than that, the tariff attacks. Tariff was a major attack for the whole economy of the world. The war might affect little bit in the market, but the tariff attacks where US made a tariff attack with each and every of the country. Each and every of the country's global economy got affected, which we saw that major downfall. So at a major downfall, 73k the market reached. That was an exact very best point for you to actually go invest in the Bitcoin in a large amount. Like if you had, don't buy 1 coin, 2 coin, 3 coin, 4 coin. Like that was a time where you could have invested lot of your investment, maybe buy more than 5 or 10 crypto coins like Ethereum, Solana or Bitcoin as well. Because when it reached to 73, we knew there's one and very simple thing. I've told you this so long time, that once a coin falls down, it's just like a spring. The spring is being pressed. There will be one time where the pressure above and below will be released and the spring is gonna jump. That's the exact thing happened at that 73k. We saw a massive jump from 73k to 100k. That was an original time for us to actually invest in the crypto and hold a very good amount of currencies, like for a longer period of time. For a long, like holding for maybe 1 year, 2 year, 3 year, 4 year, 5 year, or who knows what. Because if you go back 5 years back, where was the crypto? Crypto was what? Like $60k dollars. Now we are starting at 100k. If you would have invested in 60k, you would have got so many money, so much of profit and so much of investment. Okay. So in that thing, I am right now at the right now stage. I know 100k has become a very strong bottom support and a very strong top resistance. This market is going in a range right now. When it's at 100k level. Okay. The market is not falling. The market is not going up. It is doing a zigzag. You might not look at it in that way, but maybe let's say this is an 100 and this is, where did the market went the last time? Yeah, 100. Let's just make the line. Horizontal line, yes. This was the highest. Just a second. Let me change it into the R. Okay. And this is the bottom support which the market has created. So can you see one thing? Right now situations, we are having this one very specific thing, that our whole market is going in a range from 100 to 111. We never know when is going to be a major breakdown where the market can fall and go up to the range. Whenever it is gonna fall, let's say 90, 80 or again 70, we are gonna do a holding. We are gonna invest in the market. I would suggest you invest in the market because it's same. Again, the spring kind of situation happened. It will fall. Let it fall as much as it want. Okay. You don't have to be those things like if it fall by 90, you bought it. Maybe it will fall to 80 as well. Maybe it can fall to 70 as well. Maybe it fall to 60 as well. You just have to wait for a situation. Never, like this whole market tells you this one and very simple thing: have patience. And whenever you are doing a trading, do it with a calm mind. If you are doing rush, if you are making and those decision in the rush full time, not thinking and in your not taking decision in the calmness, your trade is gonna go wrong. That's why most of the people talk about having a risk management. What do you think? What is the risk management? Do you think the risk management is just like calculation or something? No, risk management is more of a psychology than the calculation, than the profit and all those things. It talks about, For example, I will tell you very short about a risk management, okay? Because we may have the later, like we will talk about the risk management, everything in the much more detail, but I will just give you a gist of it, like what is a risk management, okay? For example, the first trade you have taken in the risk management is of quantity wise I'm talking about, okay? The first quantity you bought is 0.3 quantity you bought and it became loss. The second trade you will do is 0.6. If it becomes profit, then you have already covered the last loss and made another 0.3 profit. This is the risk management which you do. Same thing happen if this is also loss, then the third quantity you will buy is 112. You just go and double it the time you do. Because even if because we all know, see, not all the trade, like out of 10 trade, not all the 10 trade is gonna go loss. Out of those 10 trades, maybe 7 might go right, maybe 5 might go right, maybe 4 might go right. Even though we are having a loss of 0.3, 0.6, that is fine, because the next quantity we are going to buy is double than the previous one, which will make you cover the previous profit, that is 0.3 loss, 0.63 loss, and gonna make you extra money as well. Like for example, the 0.36 and 3 becomes 9, so 0.09 becomes this, like again 10, 11, 12, yeah, again 0.3 you will be in profit. You recovered this 0.6, you recovered 0.3 plus 0.3 more profit you will be having. This is what risk management talks about, and this is a very, very basic, very simply and make you understood, but there are more complications in this as well, because it affects the psychology. Why? Because when you are investing 0.3 and you are facing the loss, the people don't have this heart to invest 0.6, the double the amount. They don't have that much heart, they don't have that much guts, because once you lose money, investing money again becomes a very hard decision. But you need to understand this one very simple thing, that the market is not meant for you to predict 100%. There are high chances that you're going to face losses. There are high chances that you're going to face profits as well. It depends on the 50-50 barrier, what psychology you are trading with. If you are trading with a very rushful, you don't know regarding the market, in that, like understanding the market, where the market is going, how to read the chart and every of those things, and you are just trading blindly, even though there is an uptrend, and you don't understand the inside things of the market. The inside thing of the market becomes the liquidity grab, how the market grabs the liquidity, and also the SMC, which is smart money concept. How, one second, jaldi kar yaar. How big people manipulate the market, because why people say that market is very unpredictable place, because it never, like as per the book knowledge, we see an uptrend and downtrend is very simple to understand, but at the same point, okay, almost done. Uptrend and downtrend is very simple to understand, but at the same point in the market, you don't see those things exactly, like in a very symptomatic, in a very good way. You won't see. It will be constant. It will be like constant changing. A very sudden up, very sudden down, very sudden side, very sudden this, and it will make you more confused what is actually happening. But if overall you look, like I have made you understand that 5-wave theory as well, right? The Elliott wave theory is where you understood regarding how the internal structure works. I have told you this scenario where like in overall, if one trend is a downtrend, overall I'm saying, like I will make you example, one second. Okay. So if you look at this situation, like from the top, the market is still down. This is the structure. This will be the break of structure. If this structure has been break, then we can say that a uptrend is gonna come. Okay. Before that, whenever the market is falling, it is, see, slight uptrend you can see over here, but majorly It is a downtrend situation. I will create a line. See, what does this line tells you? That the market has fallen. Even though the market came up like slightly, maybe 2 to 3 days back, we have seen the market has taken a slight uptrend over here. But majoritarily, it can be just a retracement. You know what is retracement, because market never falls down like a sweep. The market falls down like it will go, it will come up, it will go, it will come up, it will go, it will come up. So this part, if you look at it in a lower time frame, it will look like a major uptrend. Like, yeah, now uptrend is gonna start and every of those things. But if you look in a higher time frame, they are just nothing but this thing, like a retracement for a longer downtrend. Okay, so even there is a downtrend, you can see a uptrend, a very slight smallest uptrend, and that too with a big candles. Okay, which is there to make you confused regarding what is going to happen in the market. Because whenever the people's mentality is that whenever there is a big candle, that means a majority of the people are doing that. But you have to remember this one very specific thing, that no, the majority of people are not doing that. It is just few people who is doing that, because I've told you this one thing very specifically from the starting itself, that the retailers cannot make the big candles. The only big player can make the big candles. The big player have a big investment. We have a small investment. Even though in a quantity wise we are big, but in investment wise we are small. So whenever a big player is investing, do not see. SMC says that take a trade at that time, but after them, do not take a trade. Because the situation might happen is it gave you a sudden downfall. Like you can clearly see, like this is this candle. Okay, let's just see. This candle was made, a very big red candle was made here. Okay, and this is by the SMC people, because we are watching a 1 hour chart pattern. In a 1 hour chart pattern, if some big candle is coming, sure and short, it is a big player's candle. Whenever the big player candle is coming, a lot of people will go for another this big player entered for the downside, and now again he's gonna go for more downside. But at the same point you will see, the structure has changed from exactly that point. The market has started to go up a little, and there are high chances that the market will come exactly at the situations and again fall, because the people, the big player, they do not go by the trading. Like they will watch the chart, where is the market, how is the market going. No, they don't do such stuffs. They just have like, what is the market price going on? Okay, this is the market price, this is my investment, and I want to do it. And they will put the limit orders rather than just waiting for the market to come over there. They will just put the limit order, like at this price, if the market comes, I am gonna buy this quantity, or I am gonna sell XYZ quantity. In that situation, for example, I'm just saying, if you see, as if you are a vendor is basically if you are a shopkeeper. Let's say, understand, if you are a shopkeeper, I will just delete everything. Okay, if you are a shopkeeper, for example, okay, this is a shop of yours, okay, and there are two people. Okay, and you are selling, what you want to sell? Kunafa? No, I hate kunafa. What you want to sell? What I want to sell? You are selling a car. Okay, this is a shop who is selling a car. Now one person says that I want this car, and the car price right now is going at 90k. Okay, dirham I'm asking about. I'm not talking about the INR. 90k dirham, that car price is right now. This guy says, I want to buy the 90k, but my quantity is just 1. Okay. And the other guy comes and says, like, I want to buy 100 cars, but I want to buy at 85. If your car price becomes 85, then I'm going to buy 100 cars. So as this shopkeeper, like if you are a shopkeeper, where is your profit? One car selling at 90k, one, that is your profit of this guy becomes 90k, but even though like he has to pay the manufacturer and blah 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 xyz, he will be having a very, let's say 50%, let's say 45k is his profit from that one car which is sold. Half amount will go for the manufacturers, the workers, and all. So 45k he earned from this one guy. Okay, and now this another guy came and he told at 85k, 5k below the original price of what the market price of that car right now, more 5k down if it comes. If you are willing to sell it by 85k, I'm gonna purchase 100 cars. What is this thing? What is the difference between here? Market price, quantity is less. Investment. This is that guy's investment. He just want to buy one car. This is the other guy. The market price is less, but the investment is big. 100 cars you want to buy. Obviously that car shopkeeper guy, even if you are the shopkeeper guy, you will want to make the deal for this guy. Even though the market has 90k, you would want the market price to come down to 85 and then give this guy 100 car, because you know the 100 car is gonna give you a lots and tons of profit because of the investment is big. One car at 85k, so 85k, 85, okay, 85k 000, this is 85k and he's gonna buy 100, so more 20. Okay, this is his investment, from which even if we deduct 50% would be somewhere 0.0000. I'll do calculations. I'm bad at maths. 85 and 2. Okay, it's somewhere 4250. Yeah, this amount of 0. Okay. So his profit becomes 42 lakh, I guess. 1, 10, 100,000, 10,000 lakh. Yeah, 42 lakh. His investment becomes 42 lakh profit. 42 lakh profit he will make from this guy. From this guy is gonna make 42 lakh. Now which profit is good? 45k or 42 lakhs? Obviously 42 lakh. This is the exact thing what market does. The exact thing. What happens in the market? Whenever, for example, this is the market going on. This is the market going on at one place at one point, and this is at a current period of time. Let's talk about, let's say it is at 100k the market is. People are investing. I'm not saying that investment has stopped. Okay, investment is there, but the investment amount very less. Market is not able to make profit from it. Very low amount of profit the market is making, because retailer, they don't buy in the quantity of 1, 2, 3, 10, 20, 30. They buy maybe at 0.5, 0.8, 0.9, maybe 1, maybe 2. That's all. More than that, I don't think so retailer will invest in the BTC, because it is priced at that amount of level. Okay, so, and there is another guy who's put a limit order. You know how to put limit order, right? I will just show you. Like, see, just click the left hand. Oh, I haven't started trade. Limit. Yeah, see this. You can see limit order. I will pick, like, right now the market is going at what, 105. I will pick, like, if it comes to 104. See, my limit order went little down. The real time is going on 105,159. This is the real time price of the market. I said at 104,166.86. If the market comes at that level, I'm gonna, whatever quantity you wanna buy, 1, 2, 3, 4, 5, 6, whatever profit quantity you wanna buy, and it will show you the margin USDT as well, like how much USDT you will require for that amount of quantity. So if I place 100 quantity over here, 100 The order margin is cash required to open a position, factoring in the quantities in your leverage and blah 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 blah. Okay, whatever. So if I buy 100 quantity, I don't have this kind of amount because obviously I'm a retailer. But those people have. Those people have like tons and tons and tons of amount. So when the market sees this one thing, that limit order is placed at this level. This is the level, like let's say it is at 80 and the amount has been put for 100 unit. 100 unit Bitcoin, can you just imagine, it is at $105K. 100 unit becomes that unimaginable money which I am not able to spell or tell you. Okay, so when the market sees this thing, obviously now the market is not something which cannot be manipulated. The market is not something which can be like has to follow one strict pattern or something. They are in the control. They have the control. They can make it go down as well. They can make it go side as well. They can make it crash as well. And they can make it go jump the most profitable as well. They have the control. Okay. Even though they say they don't have, but they have. When they have a control and when they see the 100 at 80K and 100 unit will be bought, and I am gonna have a very huge amount of profit and investment will become a very huge amount of liquidity will be inflow of the money will happen a lot in a huge amount if the market comes to 80K. Inflow is basically how much money entered in the market, and liquidity again the same, because liquidity is just your stop losses, or liquidity can be also considered as like the money in the market. So to grab to have that liquidity, like to have that investment in the market, the people, those people who are doing those stuffs, they will make the market go down at this point, and the order of this guy is gonna be placed. Once, as I told you, they don't trade and like I will, this is 100 quantity, I will put the buy button or something. No, they don't do it like that. They want the instant. That was, have you seen like whenever in the market when you are there, an instant sudden up, sudden low of the market happens. Like candle becomes sudden up and sudden low. Why? Because of these things. Because the limit order is placed. Limit order is placed suddenly itself. And why sudden up? Because the quantity is great. If the quantity is not like 0.5, 0.2, 0.8, 1, 2, then it won't do the sudden up. It will be like little bit. So this is the thing what market does, because they will make it go down, get this guy's investment, and maybe again it will go back to the original places. Now, when you realize this one thing, it makes a chart pattern. How to analyze where the people's like order is, or where the people are doing every of those things, where is the limit order is. There is one condition, one thing which you can do is supply zone, demand zone, which you can know about it, or you can also know by the fair value gap. Okay, but these are a kind of concept which is little hard to understand for the people. But the more basic, the more simple thing for you to understand from the market, from where you can see how the market is working, or where I can find this limit orders and everything, is chart pattern. And that's the topic which we are going to talk about today. We are going to talk about how to identify the chart patterns, how many common chart patterns are there, the reversal chart pattern, the continuous chart pattern. I will tell you regarding each and every of the stuffs. Okay, but for let's just understand this one thing. The market was here, it came down, limit order set, and again went up. Okay, and again at the same point, like I told you, these people, they don't have one single order. They have a huge XYZ amount which cannot be put in the market at one go. So they will put the second, maybe third, maybe fourth. In a part wise, they will invest in the market. So again the market will come down, again the market will go, again the market will come down. So can you see just this thing? One chart pattern is formed over here. What is this chart pattern? It is making top, bottom, top, bottom, top, bottom. This is considered to be the double top chart pattern, or even in the continuous chart pattern, it is, one second. In the continuous chart pattern, it is also called as bullish rectangle. So these are the ways where you can find out where the market can head easily. See, I won't say this thing, like I have told you so many times whenever I have told you regarding any of the content, that Nothing is constant in the market. You have to understand this one very specific thing. The market is very uncertain place where anything can happen the next moment. If a very major downfall is happening, sudden upgrowth there is a possibility of sudden upgrowth as well, which is very easy to find out because of the SMC. SMC is a very good. I have already created a lot of video regarding SMC, so please go and check out all those videos where I've talked about the SMCs. Okay, you won't find in the title, but there will be some things like crypto live trading for some June. I don't know regarding which date, but I have talked about it. So this is the one thing, okay, that whole thing which I talked about right now, this is the one factor of understanding the cryptocurrency. The next factor comes is what is happening outside the crypto world, which is your basically news, which is your how the economy is happening. Even if like, see, USDT is a very strong currency right now. Dollar is a very strong currency right now. But the more stronger is Kuwait, but they are not dealing in the digital way. They're very traditional. They don't want to deal with this cryptocurrency and every of those things. The Kuwait beats dollar. Their currency is that strong because they don't like print a lot of money, and also whatever decision they made, they didn't involve USA for any kind of help. Even if you have to take out the oil, even you have to take out any of those things, they didn't do. Everything is manufactured by those people. They don't trade with the outside people. That's why their currency is very strong. Now at this point, US's currency, the dollar, is been globally accepted. Why? Because globally it is been traded in the dollar wise. You can go in any international airports and everything. They will accept you. Even if you have dollar, if you are in India, you have dollar, they will accept your dollar as well. Because it's a global trade currency. Okay. So whenever there is some news regarding the dollar, some Trump's action, some those major people which have a very huge impact on the world in economic wise, in the war escalation wise, or in some growth wise as well. I'm not saying about the only negative stuffs, the positive stuffs as well, because the news affects the market in two different ways. One is a positive and one is a negative way. Positive way tells you regarding like something good happening outside, like informing you about a new product launch, informing you about a new thing which is coming. Like for example, a positive way for the cryptocurrency was like it is a transparent, and plus the major advantage of the cryptocurrency was that no government can interfere in this matter. Whatever transaction I am doing, XYZ amount I shared with you, that no government can question it, where that money came from, why you are doing it, and blah blah blah, because it's a decentralized platform. Everybody can see it. It is a transparent. I'm not saying that. See, blockchain is a transparent. Like if one transaction is happening in let's say example of block 9 and block 10, okay, this whole transaction just happened between 9 and 10, but it will be recorded from the 1 to the last amount, whatever person is connected in that chain. It will be updated in all those. That's why it's called as blockchain. One transaction will be updated in every. So everybody knows what is happening, but they cannot interfere. There is no middle person over here. There is no middle bank, middle government, which can question regarding the digital currencies. This is the one of the reason why governments of a lot of countries are having those things, like they are not legally doing the cryptocurrency, like they are not like making people have the trades or the open app, or even they can ask a lot of taxes. Like India is asking 30% of taxes on your income. Like even though you earn, let's say 100 rupee, 30 rupee will go to them, 70 will become to you. Let's just make it, let's just say if you make 1 lakh rupee, from that 30,000 will go to the government for no reason, and 70,000 will be with you. So these are the things which as government has it, and due to this factor, like it's a decentralized, government cannot interfere. The government doesn't want people to be rich than them. If you see a person is rich and he's showing off that I have this, I have that, and that, trust me, that guy is gonna get screwed, or it's gonna be asked a money from the people, from the government, that we need help for this, we need help for that, and blah and blah and blah and blah and blah. Those are the situation which happens a lot of times. Other than that, this news, like I told you, like this is a positive news. Negative news comes in this tariff tax, the economy, and every those things. So whenever we are in this scenarios where we are knowing the positive news and we are knowing the negative news, we know that these two things can affect the market. Positive can make the market go up, negative can make the market go down. We can be fully aware of the situation from the outside the world, and we can predict. Like, see, I told you the market works in a present continuous and the future tense. Future tense, we can never know what is going to happen the next. Predict it, guess it, yes, but accurately, no. Like 100% accuracy, accurately, like we can do it, I'm not saying we cannot do it. 100% accuracy is not. Like a person will say like the next candle is gonna be a very big bull candle because there is gonna be XYZ limit order is gonna, no, nobody can guess it. Okay, we are just making these concepts, we are just talking about the strategies so that we can track those people. Nobody can track 100%. Okay, so this positive and negative news is the other factor that makes the whole crypto trading complete. One, understanding of the chart pattern, understanding the market and every of those things. And second, understanding the whole what is happening outside the world, how it can affect the crypto and every of those things. These are the two things which make the crypto trading the most accurate. If you're having just one, there might be chances like when you see those kind of, like if you are Aniket Rajkarne, welcome Aniket Rajkarne, welcome to the live stream of the Cheesy Family. Thank you so much for joining it. Let me just do one thing. One second, people. One second. Just one second. Let me just check out some things. You can ask me flower. I said for. Okay, cool. So let's just okay. Why my limit order is not getting cancelled? Okay, cancelled. Okay. So let's just start with our content. And like I told you right now, I was telling about that thing as well. Sorry, I forgot. Right now we are seeing that the market is going in a one range from 111 to our lowest point where the market is taking somewhere, that is 100. So the whole market, why I am not doing a holding and why you should not do holding of the market. See, invest. I'm not saying don't do investment. Investment can be of like the intraday trading, have a small entry, small profits and all those things. But if you want to hold for a longer period of time, trust me, let it go below the 100k, let it go down, and then you can hold, you can invest the larger amount and you can hold it for a longer period of time. But until and unless this range is broken, do not go for the long term holdings, because this range will be broken at one point, either for the up or either for the down, that we are not aware of, but it will happen, that is very very sure. Okay, so for that reason, don't go for the major holdings of the market, go for the range market, like go for the shorter period of trade, shorter period of profit and all of those things. Okay, do inter trading for a little while time, or you can also do the swing trading, wait for the swings and those things. But if you want to hold for maybe year, 2 year, 1 month, 2 months, 6 months, or whatever things you want to do, don't go for the long term holdings right now, until unless this whole range is broken, like the from the 112 to 100k, because that is where the market is ranging right now. It has a very great support at 100, which is very good. Whenever it comes to 100, go for the buy situation. It will eventually go to at least 0.50, 105, 106, 107. But until and unless it comes down to take support, do not go for entry. Okay, it will make you very confusing. Now I just want to, that's the thing which I want to tell you. But now let's understand the chart patterns of the market, because that is a very very important part. What data is available on our platform for people, like whenever people are doing trading, any people, like global people who are doing a trading, what kind of data do we get? We get this bars, the bar, green bar, red bar, and they make one snake like pattern. It is going like snake, it is straight jump, straight out, and all of those things. So this is the thing we have to understand, that what does this chart pattern means. The people who were analyzing the chart patterns for so long time, they have identified 2 to 3 key points of the market which is there for a longer period of time, and it is actually following, not measured time. Like I told you, not every content of the crypto market is meant to give you 100% result. There is no such thing which can give you 100% result. There are things which can give you 60, 70, 80. But this is the knowledge which is very required for you to understand the chart pattern, because with that help, you can have your entry plan for a shorter period of time, and you can know what is going to happen, what may, not no, because no is a statement that you know exactly what is going to happen. What may can happen in the future. One second. So let's understand regarding the chart pattern right now. We will talk regarding this analyze of the market a little later. Let's understand first, refresh your memories regarding the chart patterns, how it works, why it works, and those things. So first we will talk about the reversal chart patterns. Okay, I will write it. The first thing we are going to talk about is reversal chart pattern. Chart pattern, there are two types. One is a continuous and second is the reversal. Understanding which one is the continuous, which one is a reversal is a little difficult but easy at the same point. You just have to know the key factors, what makes this chart pattern that chart pattern. What are the conditions for that chart pattern to be formed and give us that kind of results. Okay, then you can know regarding such stuffs very accurately and you can predict what move can happen very accurately as well. But I want to tell you this one very specific thing in the starting itself. Do not consume this knowledge as a guarantee that it is 100% true, because there have been situations like, for example, the first topic, the first chart pattern I'm going to talk about is a double top. Let me use the path. So this is the double top. Most of the time what happens is at this point the market is gonna go down from here. That's what double top chart means. It is a bearish chart pattern. There are few, okay, I want to tell you regarding those, but see, first I want to give you one disclaimer, like what is gonna happen. This is not the truth of the market, the harsh fact of the market. It is said. Should I tell you right now or should I wait for you to tell it? I'm getting confused in those scenarios. I will just talk about the chart pattern in between. Whenever that topic comes, I will explain you those things. So first, let's understand the two different types of chart pattern. One is reversal and one is a continuous. Let's understand the difference. First, we were talking about the reversal chart pattern. For example, if the chart is in an uptrend, it's going in an uptrend. Now a sudden downfall comes, which becomes a downtrend. What happened over here? A reversal move happened. From an uptrend, which is going up, it became a downtrend. So what happened over here? A reversal. Up to down and down to up. Changing of a trend. That is called as a reversal chart pattern. A trend is changing from up to the down or down to the up. Got it? Very simple. Now the next thing is bearish chart pattern. What is bearish chart pattern and what is a bullish chart pattern? Because I'll be using those words a lot. So you should know regarding this stuff, what is called as a bearish chart pattern and what is called as a like this bullish chart pattern. Bullish. I forgot the word. So bullish chart pattern. By the name itself, you will guess very accurately that bull is what? Making the market go up. Right? So a bullish chart pattern will have a downtrend at first, and as it's a bullish, it will go up afterwards. What happened over here? Down to up. First down, second up. This is bullish chart pattern. I will talk about the chart patterns, but I just want to give you a little hints like what is what. Okay, so bullish chart pattern, as it's a reversal, it is changing from down to up. Got it? And vice versa for the bearish chart pattern. This is a bearish chart pattern. Vice versa happen is, as a bearish, we know the bear is what makes the market go down. So as it's a reversal, it should be in an uptrend first and then it can go for downtrend. So it is coming from up to the down. Up to down is a bearish, down to up bullish. Understood? Okay, these are the basic thing which you need to understand regarding the chart patterns. Reversal, when there is a change of trend from up to the down, that is your bearish. This is the up and this is the down. Bullish, from down to the up, that is basically your bullish chart pattern. First down and then up. Got it? These are the basic thing which needs to be clear. Now let's jump to our first chart pattern, that is, I want okay. First chart pattern, that is double top chart pattern, which is considered to be a bearish chart pattern. I will just make the pattern first. Okay. And I wanna write it over here like this is a bearish. Okay. Okay. Reversal level I keep here. This is a bearish chart pattern and it is named as double bottom, double top, sorry. This is the first chart pattern which is called as double top chart pattern, which is a bearish chart pattern. Now, why double top? Very clearly you can see that there are two tops. Very clearly you can see there are two tops which has been created at this point. This is also known as M pattern. M, because you can clearly see again it looks like an M. So double top chart pattern, or people will call it as an M, because in this cryptocurrency, like the trading and or the chart or the stocks, wherever you are doing a trading, a lot of people give a lot of different names, but it has the same meaning, it has the same value, it has the same thing. Now this pattern is also called as double chart pattern and also called as M pattern as well. Okay, M pattern is very easy to say, double top is a little hard to say, so it's potato, whatever you want to choose you can pick. Okay, now let's talk about how this chart is forming, why this chart is forming, and what are the conditions are required for this chart to form. Simple. Okay, first we'll understand how it is made. First, little side, yeah. Good. The first condition for this chart to be made, or it to be called as the double top pattern, which you can clearly see there are two tops which has been created. Okay, first condition of this is that it should be always made in an uptrend. It should not be made in a downtrend. If it's made in downtrend, it might not give you that result which is required for it to give. Got it? First condition says it should always be an uptrend. Start will be uptrend as it's a reversal. I told you it's a bearish reversal, so it's the start should be an uptrend. From here it should be up, one bottom, one top, again came down, another top and going down. Got it? This is the first condition, that it should be an uptrend. It should be formed in an uptrend only. That's all. Other condition says that this two resistance, top is created by how? Because there is an extreme level. One second, let me just. Okay. There is an extreme levels of resistance over here. Okay, resistance. Market took resistance from this place. This is resistance. Okay, just don't mind my writing, but yes, this is the resistance. The market came up, sorry, the market was coming up. There was the dominance of which people? The buyers, because the uptrend is created by the buyers. Buying. The demand is increasing, the market price is going up. Okay. So now the uptrend is, the buyer dominance is there. But at some point, as you all know, whenever, even if you are doing a tug of war, okay, for example, we are doing a tug of war. One side team and other side team, they are equal amount. 5 people. They are all pulling together. At some point, all those 5 people are not same. Maybe for the starting period of time, these first 4, let's say, leave 4. The first 3 people of the buyers were very strong. They gave all of their energy, like they are pulling it very strong. They want to win. They're pulling it strong. At some point, and this all people are just doing defense. They are not becoming aggressive. They are not like giving that much of energy to pull the rope and every of those things. So at one point, this 3 will be little weakened because the energy is gone now. They will feel that the grip is now little heavy and we are having a huge amount of force from the opposite sides. The rest of the 2 people are remaining. 5 people are here. Who will win? Obviously the sellers. Same thing happens in the market. If if an uptrend is going on, that uptrend won't be there for a longer period of time. And it will be there till the point where you will see the investment, the volume is good. Once this volume and investment amount decreases, because see, one point you will invest, like for example, at the timing from the next 5 minutes, right now it is 120, 120, right now it is 120 p.m. in the Dubai. So at the 120 p.m., if there are 100 people entering in the market with a good investment, yes, that is gonna make an uptrend. But after that 5 minute, people invested, their money is gone, they don't, and now they are waiting for their profit, they are waiting for their take profit and everything things. The rest of the people, the 100 people came together for the buy, they entered, investment gone. Now the market is again at the imbalance place. It's not a perfect dominance because the dominance was for the 100 people in before 5 minutes. After 5 minutes, after those 5 people's energy, which is equals to their investment, is already invested, is already gone from their wallet. Now they don't have strength. They are just waiting for their take profit. So this affects in what? The strength of the buyers, the volume of the buyers and the investment of the buyers become little low after that 5 minutes. Because whatever energy, whatever investment was supposed to happen, happened before 5 minutes. After 5 minutes, there may be, I'm saying maybe situation, okay? I'm not saying that this exactly happens like this. After 5 minutes, maybe there will be sellers will be entered, like 100 sellers may enter for a strong selling and they will make the market go down. So it depends on the situation of the strength. What strength the market is having, and a strength cannot be a constant because the investment cannot be constant. The people's wallet, people's capital cannot be constant. Not every 5 minutes people is going to invest the same amount every 5 minutes. A good kind of amount to maintain the strength and every of those things. Okay, it is not going to happen. At one point, whenever the investment is invested, then you are now I'm invested and all those kind of stuff. So this situation occurs with a strong resistance. This is an imaginary resistance, is like an imaginary word we created for ourselves. Okay, like for example, equators. An Earth has a North Pole and Earth has a South Pole. One second. Can you speak it? So, as the equator, the North Pole and the South Pole, we have made an imaginary lines to know what? To know the longitudes and latitudes of the places. Is it there? Can you see it? No, we cannot see it. But we made an imaginary line for those things. Same thing in the market, we created imaginary lines. Like this is the point where the market has taken support. So we create a line at that. This is the point where the market has taken resistance. We create a line at that point. Same thing happened over here. It tells us that at this point, the strength of the seller may again rise. Or like as I told you, the limit order thing, like the people place the limit order. So maybe this is the place we can evaluate, or we can guess that this might be the place where the another downfall can start happen because of the limit order which has been placed. So once the strength, before we had a dominance of the buyers, we had a very good strength, good strength, good strength, good strength, good strength. After that, we have seen one very specific thing, that at the top, at this point and this point, we saw a major resistance. The buyer dominance went low and the seller dominance, which is making the market go down, became up. Okay. Then again, as the whole trend is an uptrend. Like I told you, the first condition says that it should be an uptrend. The market takes a support at this point. This is the support point where the buyer comes when they see like the market is going down, we are losing our strength and all those things. They give the last try of making the market go up. They give their last strength. They shout out, they call out to people, but not everybody have that investment to invest in the majority. Few people have, they will try to make the market go up. This is just like taking back the dominance. But are they successful? No. Why? Because at the same point, this is the second condition, okay? Please note it. Because at the same point, whenever you see the first resistance was taken, at the same exact point, the second resistance is taken at the same point. This is the second condition, that at the double top, when the double top is forming, this two tops, okay, why I'm explaining in this, these two tops, they should be not at the exact same place, like the same number, because that is little like it cannot happen at the same number. There are chances to happen at the same number as well, but even if it varies a little I'm saying, if like for example, this is the first top and this is the second top. See, this is varying little up, it is, that is totally fine. But if it is having a major difference, like this is the first top and this is the second top, then we don't consider it as a double top pattern. We don't consider it as a double top pattern, because this resistance is at a two different level. This is the second condition, that the double top should be at like first it should be the double top should be either at the same level, or it can vary a little up or down, fine, but not the major. The resistance should be at a same level, because we know we don't consider resistance to be one specific line. We consider a zone. Like if it goes from this 90 to 95k, it has become a resistance zone. It can fall from any time place. So this is a zone which is created. So that's why a little up and down, fine. So second condition, first was it should be in an uptrend. Second condition we are talking about is the market should have equal top, or a little differ is fine. Little differ is fine, not the major difference. Little differ in the market, fine, but not the major ones. This is the second condition, that both of the top should be either at the same or a little difference. Okay. After that, what you need to do is, when you find out after that, when you found out that yes, first condition, as it says that, let me remove this. First condition, uptrend. Second condition, that the top acts as a resistance. It should be either same or little difference, fine. Third condition says this. This is very important condition as well. This is called as neckline. Whenever the market goes up and it is fall, from wherever it is taking a support, you will create an horizontal line. You will just go for this option, see horizontal line, and at that point you will just place it. It will create your neckline, because that is very important. Understand these things. Neckline is very important, because this is where the majority of the situation is changing its character. Like I told you, first dominance of uptrend coming down, dominance went to the sellers. Another change of character happened. Again, the buyer tried to took the strength, tried to took the dominance. Did they pass? No. It went again to the resistance line. From there it fall. Now, crucial point. As it has taken the support from this zone, which is our neckline, which is called as neckline. Neckline acts as a support line, from where, again I told you, this is the imaginary line which we have created for our understanding. It is not there, like it's just like our understanding. Yeah, the market takes support over here because market took, the majority changed, like from buy to sell change at that point, from the sell to the buy change at that point. That's why we named it resistance or the support. Okay, so at this neckline, now you have created one line over here. Just imagine for 1 minute, like I will just do that thing. Let me just delete everything. I will tell you accurately what happens, so that you won't get confused. And I will also show you the chart pattern in the real, how it happened, why it happened, and blah 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 thing. And in the end, I will also give you one fact, one truthful, hurtful fact as well, like what can happen in the market and how it can happen, every of those things. Okay. I'm deleting this pattern as well for a better understanding. First, we saw just an uptrend, right? Then at this resistance point, as this is a resistance line, we saw a downtrend. We were till here. At this point, the market took support, trying to go up. Did it go to the resistance point till now? No. I will just keep it like this. Yeah. At this point, whenever the market is taking support, you draw a line over here. Okay. This is the half chart pattern is made. And this is how it will look in the real life as well, whenever the chart pattern is being made and every of those things. So it is not completed yet. You will see the first top, the first bottom. You create the neckline at the support. Wherever the market has taken a support, create a neckline, and wherever the market has taken resistance, create a resistance line. Simple as that. That's all. Now observe that if this market is again taking the same resistance or not. Like I told you, little difference, fine. Little difference is fine, that doesn't matter. But if it's taking the same resistance or not, that you should look for. Okay. After that thing, when you saw that the market has taken the same resistance, now you become a little sure that maybe this can be the double top chart pattern. And now I will tell you where you have to enter, how you have to enter, and all of those things. Okay. Market took the resistance at that point, and it is now coming down. The major key thing which you need to know is, the major key thing which you require to know right now is, what is the neckline doing at that point? If the neckline is taking support again, and going up, fine, wait. If the neckline is not taking a support and giving us a breakout, that's the point where we enter for the short sell. Because the neckline is nothing but your support zone. where the market can take another support or the buyers can enter in the market at that point. If when this support line, this neckline is broken, we became confirmed that the dominance from the buyers has been taken away to the sellers. Got it? So how to invest in such kind of chart patterns? First, observe. Like I told you, whenever the market is in the uptrend, observe the uptrend. Observe. And whenever it's making one top and from there the market has fallen, just draw one line at the resistance. That this is the place where market has taken resistance. Okay. Next, the market will come down. It will eventually take one support. Draw one line at the support. This thing has not been created yet. You just created one support, one resistance and one support. From there, you will see the market. If it is a double top pattern, it will try to follow the same thing. It will try to take a resistance at the same exact thing. And from there, it will fall. Whenever it falls, this is a key point. You have to, you don't have to sell over here. You don't have to enter the market for short selling over here. This is not the place you enter. This is the, I created. Yeah. This is not the place where you enter. This is the place where you enter in the market. Why? Because there is a major support zone which we have created, which the market has created. So we'll try to go and check out if the market is actually coming there, taking the support again or not. That is the key thing which we need to observe. If it doesn't take a support and if it gives a very good breakout candle, this is the point where we enter in the market and we can clearly have a good investment. Like maybe we can go for short position, we'll go and we can have 1:2 ratio, 1:3 or 1:4. Where to keep your stop loss? See, I personally believe in one thing which I want to tell you, but I will tell you in the last. But I think this is a point where I should tell you. Okay, yeah. This is a book knowledge. Till the point what I have told you till right now is a book knowledge. How the chart pattern is created, the dominance, the exchange, the support, the resistance, the breakout, enter, have this and blah 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 thing. This is a bookish knowledge. But what actually happens is, I will tell you what actually happens is, the market never actually does the same exact movement what the book tells. The market will go at the point of the breakout. See, it came again at the support level. From here, it will go little down. This is an greedy signal. Greedy. Why my handwriting is so bad? Greed. This is a greed signal. Why? Because people know at the neckline breakout, we have to enter for the short sell. It gave us a breakout, people entered for the short sell, but it's just a greedy signal because the market knows what people can do. Market knows what people will go for and why people will go and where they will put the stop losses. Because as per this thing, the stop losses should be little small. Like wherever you can see this is a breakout. For example, if this is a breakout candle, if this is a breakout candle, next to breakout candles, high should be your stop loss, and from there your target should be 2 or something. Like for example, if this is this, I entered over here. For example, my stop loss will be here, and my risk reward ratio will be 1:2, something like that. 1:1, 1:2. Okay, this will be my this thing. What happened? Fine. This will be my trade according to the book, but what actually happens, I will tell you. Why I don't put stop loss? But see, my way is a risky way as well. I'm not saying that my way is the most perfect way or something. Okay, my way is a risky way because in this you can have a major losses as well. Keep that thing in the mind. Okay, the truth I will tell you. This is the bookish knowledge, now the truth knowledge. The market will go down give the greed signal, a lot of people who knows that this is the chart pattern, this is how the chart pattern works, this is how the market is going to do right now, it is going to go for short selling and blah 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 blah. It go down, lot of people, let's say 60% of people entered in this for the short sell. The market will come down a little and again it will try to retest himself. Okay, people call it retest, but I call it just fooling the people, us. It will go and collect the stop losses of people. They might have somewhere here will be the bunch of stop losses of all those 60 people. This is the 60 people who entered for the short sell. Their stop losses SL. Their SL will be here. The market will try to grab. This is a liquidity grab, what we call in the professional term, which is called as a liquidity grab. The market will just go up to grab that liquidity and then again it will fall down. This is the truth. What happens in the market. And this is the bookish knowledge. Breakout, go for buy entry. They don't tell you about the fake breakouts. They don't tell you about the liquidity grab. That's why when I know the market is gonna come up, just it wants to go down. It wants to go down. That is for very, very sure. But at the same point, I want to go up just to grab a liquidity, the stop losses of lots of people to make them have the loss so that they can have a profit. That's why I don't keep SL. I don't keep stop loss until and unless whenever it is coming up, I wait for the moment. When I want to enter in the market, I don't enter at the breakout. I enter for the retest because I know one thing for very sure. One effort from the market is always there for grabbing the liquidity. I will show you in the chart pattern as well. In the live, we will see it in the chart pattern. This one efforts of again going back and from there falling down. This effort is a very common effort which makes from the market, like just to grab the liquidity and everything. That's why I wait for the retest. Even though if the market doesn't make a retest, it falls continuously down, I don't have a regret in it because I did a safe thing rather than just doing an like very riskful trade or something. I waited for my thing. If the retest doesn't happen, if the liquidity grab doesn't happen, that's fine. I'll try the next because the market is 24/7 available for you. It is not that like you only get one chance in a one day. No, you can get multiple chances in the market. If one thing you have predicted went wrong, fine, totally fine. But at least you are safe in this. This is the exactly thing what I do. Even if majority of the time there is a retest, the majority of the time the market will again go up to grab the liquidity, and from there I will enter at this point when I know the liquidity grab has happened, and then I will enter. I'm actually having a greater profit because you entered at the neckline, I entered above the neckline. My profit is good. But at the same point, risk. What's the risk over here? I will talk about the risk as well. The risk is if okay, let me just delete stuffs. Okay. The risk is like not all the time. Like I told you, the chart pattern doesn't work all the time. I'm not saying that it is gonna happen exactly like this. No, it is not. Maybe 50-60% because market is an unpredictable place. Maybe there will be a time where the market is coming down, gave a breakout. From there again going up. People entered at this point. This is your SL, and the people who don't put SL, like me, I don't put SL. Maybe this market will jump from here up again till here. I'm having a huge loss over here. These are the situation also happen in the market. So you need to be aware of all these possibilities. Whenever you are doing a trading, you need to be aware of what kind of situation might occur in your life or in your trading. Every possibility you need to be aware of. If you don't put stop losses, this is the major drawback which can happen. If the market doesn't stop, it is not a retracement and it will not fall down. If it continues to go up, you are going to have a major losses. At that point, you might feel like I should have had, my charging is low. 1 second, I'll grab the charger. Hello people, sorry for that thing. My laptop needs a bit of charging. Okay, where were we? Yeah, this is the drawback. Okay, I told you everything. I told you what are the conditions. It should be always forming an uptrend. Wait for the resistance to form. Draw resistance line. Wait for the neckline. Take support. Take the necklines. Draw the neckline and wait for the market to either break out. If it taking another support going up, it is totally fine. Okay, it is not meant ki like it should be double top only. Like there can be triple top as well. Like situation kind of like this. Market went up, take resistance, market takes support, take resistance, market takes support, and then it can give a breakout. This situation also can happen. 3 resistance and 2 support the market can take. It depends on the market. Majority, generally, the double top happens. But if it's not the double top, there are chances that this thing. That's why people draw the line at the neckline and wait for the market either to take breakout or take support. If it takes supports, we'll wait, or you can have a short entry because after taking a support it will go to the resistance point only. Okay, so there are 2 to 3 ways where you can enter in these chart pattern. Now let's take a live. Okay, I'll delete everything. Let's take a live example of a double top pattern. Which is the live example? Let's find it out. See, uptrend, one top, came down, neckline, again went up, top, and it didn't came down. So at this point, what you will do? Whenever you see in uptrend, the market is beginning. First resistance, draw the horizontal line. Done. It came down, it took a support, draw the another neckline over here. Done. After this point, you will see this one very specific. Where is this thing? Yeah, this is the path. This is up, took down support. Another resistance went up, and exactly at that resistance line the market is again taking resistance. This gave us an assurity that this might be a double top pattern. After that, you can clearly see the market has fallen down till here. Yes, in between there is lot of those scenarios where the market is not like I told you, like neckline is not meant for you to have a breakout in the first place itself. It can take support again and again, and it doesn't like it depends what is the strength and all at that point. Okay, but we can clearly see a major downfall we can see from the neckline itself. Okay, from that major neckline itself, even though the market came down, took support, like I told you, it can take From there again it went, again it came down, it gave us a breakout. But I told you this one very specific thing again, that this kind of breakouts can be a fake breakouts. Market went up again, came down, another breakout, came up, came down, came up, came down, and then finally we can see a major downfall in the market. This is the confusing state which the market creates for you, so that you have to, the people have to grab the liquidity from the market. For example, I will give you an example. Okay, so let's say this was the place where the market entered. Where is my neckline? Yeah, this is my neckline. Okay, so this is the candle which gave us a breakout. The major breakdown was this candle with a long lower wick. This is the candle which gave us a major breakout. After that, people entered at this point. They eventually will put the stop loss at what point? I will put, this is the place where I entered at the close, and my stop loss will be the previous candle's high. If the previous candle is low, so I will pick this candle, or maybe, let's zoom it a little. Okay, if this candle is a breakout candle, I will try to pick the previous candle's high. This is my previous candle high. Let me just delete the unnecessary stuffs. Okay, so this is the previous candle high. Majority of the people, maybe it will keep it here, where the longest, the strongest resistance was there. Okay, so 50 people keeping their stop losses. Yeah, 50 people keeping the stop losses maybe here, 50 people keeping it here. Okay, let's assume this is a stop loss. Now you will see the market, whenever it gave a breakout, after that it went up, first ate this stop loss. The people who kept the stop loss over here try to grab the liquidity. First liquidity grab happened here. Market went down. Again it gave us those scenario that it is gonna go down. It is gonna go down. A big red candle we saw. At that point, at that red candle point, we saw this one very specific thing. From there again the market is trying to go up. Okay, just a second. I will extend it, and I will also extend this line. Okay, so this is the two major resistance of the market, where people might keep a stop loss for, like, if you are taking a short trade, you have to keep the stop loss above. I guess you know. So at that moment, again the next candle came, again a breakout came, people entered. Maybe they thought like this is a fake breakout, the market retested himself and now is going down again. This is a breakout, I will enter. Again from there the market went up. Did it grab the stop losses? For a few people, maybe yes. For these people, they are still safe. Again the market came down. A majority of people again gave a dominance for the downside. Again the market went on. A good green candle came and grabbed the previous high of the candle. Previous high of the candle for the resistance, so that they can grab the liquidity, so that they can grab the stop loss from you all people. Okay, and from that moment it fall. This is the exact thing which I was telling you, that I don't enter at the breakout, because I feel very unsafe to enter at the breakout point. This is a point which are very unsafe. At the breakout, this is a very unsafe point, because the market can go up again to grab the liquidity from the market. This is nothing but liquidity. Majority of the people's stop loss will be here or here, which is grabbed, which is hit, your trade is gone. And now, as the majority of traders gone, now the market will give us the good amount of downfall. Which people are safe over here? The people who didn't take, the people who didn't put the stop losses, they didn't had a stop loss. Those people are safe over here, because even though market went up, yeah, in the emotional wise, yes, they will be little in those scenario that the market is going up, they will be having those mental psychology things like, should I exit, should I exit, should I exit, should I exit, should I do what, and blah 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 stuff. But the people who are calm, the people who knows the market movements, they are aware of what kind of movement the market can make, they know one very specific thing, that this is nothing just a liquidity grab which happened. From there we saw a major downfall from the market. From the double top, you understand this one very specific thing, that the double bottom pattern, double top pattern gave you double bottom pattern, double top pattern gave you a downfall. That is for very sure, that it gave you downfall, but in what terms it gave you, that is unsure. Every time at a breakout it won't go down. This is the reality of the market. This is where it goes up, goes down, goes up, goes down. This is a reality of the market, where it will try to retest himself to go up. The buyers will not very easily give the strength to the sellers. They will try to regain their strength and every of those things. They will try hard, but at the end the market will go down. This is one of the double top pattern chart pattern example. I will give you more example. Wait, let's take another example of double top. It should be an uptrend. It should be in an uptrend. Like I told you people, it should be in an uptrend. Okay, this is can be no, I will leave it. I won't consider it as, because that is a different. Okay, this is also the things which you should be aware of. One path came up, bottom, support. Okay, it should be okay as per our conditions. This is the neckline and this is the resistance line which is there. This is a double top chart pattern which is created. Sometimes it is very hard to see the chart pattern, but it is very easy as well. So this is the first top, this is the second top which market created, and from there it gave us a breakout as well. Can you see this breakout? This was a breakout the market has created. Market went up to create what? To create liquidity grab. Good. Market went up to create the liquidity grab from here. This is the place where market grabbed the liquidity, came down. A lot of people thought that it is now gonna go for the downtrend. Again, a reversal happened. Did it pass? It failed. The chart pattern failed. So there are scenarios which can happen like this as well, which you should keep in mind. Not all the time chart pattern will give you a right entry. Sometime it will happen like this as well, where it is not giving you a bearish movement, whether it is giving you an uptrend movement. It all depend on the uncertainty. Other thing. Let's have one more, and we'll go for the next thing. Small, but we can have it. Same. Up, down, up, down. I can clearly see that M pattern over here. From the resistance I draw line, they both are at the same, little bit difference, fine. But when you create a line, like for example, I will create the line over here. Okay, this is the top and this is the top. They both are at the same point. Double top pattern, neckline, I will draw the line for the support point, and this is the pattern. Market came up, took the support resistance, came down. Now you can clearly see this was a very good movement which you could have captured. It happened exactly like the chart pattern says. From the breakout, enter, and it will give you a very good downtrend. After that, one or two, see, you can have 1.5, 1 or 2 risk reward ratio from the double top chart pattern. Okay, not more. You don't hope for 3, 4, 5, because it will change the situations or the change in the trend very easily, very quickly. So this double top pattern, you can go for 1:2 risk reward ratio, 1:5, or max 2. Don't go for more than that. If you want to go, but at your own risk, because that will be a risky situation where you don't know where the market will go for the trend reversal. So these were the examples of the double top chart pattern. Now zero indicator, zero. Okay. Let's understand the second chart pattern. Okay, so the next chart pattern we are going to talk about is double bottom chart pattern, which is a bullish chart pattern. As you can see, why bullish? I hope that you guys know right now that bullish, which means the trend will be first a down and then it will be converted into an up. Got it? Very easy to understand. Now let's just draw our chart pattern. So this is what double bottom chart pattern means, or how it looks. It can be also called as W chart pattern because again it looks like a W. So what is happening over here? Same. We'll first discuss how it is made, what kind of strength, and it's very similar. Just like all the vice versa thing is happening. Whatever we talked about the double top pattern, all the opposite vice versa thing is happening right now in the double bottom chart pattern. As the first condition tells us that first the market should be, this chart pattern should be formed in a downtrend. This is a downtrend. The market is falling. Okay, so the market is falling. Downtrend is happening, which means what? The sellers are dominant over here. Sellers are dominant. After the sellers become dominant, the market coming down. Again, the same thing like I told you that the dominance won't stay constant because a constant investment is not being put there. The people will enter at one point, they will give their investment, they will wait for their profit. Okay, so investment is not there, no strength is there. So once the investment, once the strength wants out a little, the market takes the buyer also. The buyer are also there. Like I told you, buyer and seller, these are the two components of the market. Okay, so once the buyer dominant was there, the sellers are still there. I'm not saying that sellers, once the buyer dominance comes, the sellers are not there. Seller strength, volume, investment is bigger than the buyers. It happened over here. After that, the buyer took a little up. The buyer resisted to go more down. Lots of, like for example, if there were 80% of people at sell and 20% of people at buy at this line. This line I'm talking about. Okay, this line where the 80% of people were the sellers and 20% of the people were the buyers. Now at this line, this one I'm talking about right now. Now the majority changed, maybe from 60 to 40. 60% people are buyers now and 40% of people are sellers now, because we haven't seen a major move till now. The market took a major support because of the majority of the buyer came in the market as a dominance. They made the resistance, the support, that market should not go more down. We don't want to lose money more, and they made an heavy investment, a majority of people investment in the market. The majority of people made investment in the market, and from that the market went up, and again, as the sellers are still dominant over here, they want the market to go down. They don't want to give the trend to the buyers that easily. It's a constant fight which is happening. The majority fight. First, the majority will be to the sellers, shifted to these buyers, again shifted to the sellers at this point, which created a resistance point. This will become at our what? Neck line. Okay. Okay, so once the first support is taken, we'll create, like I told you, always go for the horizontal line, just drop it over there like this and wait. Second, let the market go up. We don't enter at this point till this neckline is formed. Till the neckline, we drop this neckline like this. Till that time, we just observe the market, nothing else. Once the market takes a movement and creates a neckline, which is a strong resistance from the seller side, we create a neckline. This is the resistance neckline for us, and this is a support line for us. We created a range. Now we know the market either can take resistance from this line or either can take support from this line. A little bit vary can happen. That is not an issue. A little bit the market can go a little down, a little up. That can happen once again. Little bit difference can be there, which is totally fine, which we don't have to worry about. Okay. Now, as the neckline is formed, as I told you, this thing has not formed yet. This thing has not formed yet. We are just observing from this point. The resistance came and market went down, and the time it takes the same support. I'm not saying that it is going to take the same support for very sure. If it takes, then it is a double bottom chart pattern. If it doesn't take, then it is not the double bottom. This is the conditions which I am telling you. First, it should be in a downtrend. It should make the buyers should show a little bit dominance. Next support line should be created. Neckline should be created for the resistance. It should come down again, and from that point, if it is going up, from that point, if it is going up again, we have to wait for this point. If it breaks this situation, we enter in the market and we can go for a profit. What kind of profit you need to go for? We'll discuss that as well. But keep thing in mind, until and unless you see the market coming over here and breaking out, till that point we do not enter in the market. We do not enter in the market for those kind of situations like having for a trade, because we know the fake breakout can happen, the liquidity grab can happen, and any of those things. We are just observing the market. Once we saw the breakout, then we enter, and that too also with a very caution of looking for the retest, looking for the retracement, looking for the liquidity grab, and then we enter as per the truth. As per the book knowledge, you can enter over here, which can become handy. I'm not saying that it doesn't happen. I've showed you examples of the liquidity grab as well. I've showed you example of the normal way of entering as well, where the people enter at this point and the market has already shown us the same thing, like the same thing. It became breakout rather than giving a retest, retracement, liquidity grab, nothing happened. It gave a straight uptrend from there in a downtrend, for the double top pattern. This same thing can happen, which is not an issue. But I showed you three different scenarios. One, where liquidity grab happened. Second, where liquidity grab didn't happen. It exactly happened like the book, like I am telling right now. And the third, where the chart pattern failed to give us a breakout. Three scenario of a double top pattern I have told you. So it doesn't make you any confusing, because see, knowing such stuffs, knowing the reality which will help you in making the decisions of your trade at that moment. Once you are aware about how many probability you can have from the market, it can help you to know what kind of situations you have to deal with. Got it? Cool. Bro, lunch when? I I don't have lunch timing right now. I may have lunch time after 3:34 something. I have to go live for 4 hours. So lunch timing, either I can have before the live or after the live. Okay, these are the two situations which is there for me. So let's see. But yeah, right now I am not having a lunch time. But if you guys want to have a break, you just tell me that you want to have a break. I will stop for 5 to 10 minutes and then we can restart again. Okay, it's like since continuous 3 hours, 2 hours it has been already. I'm speaking. So if you want to have a break, we can have a break. That is totally fine by me. I don't have any those things, like I don't mind it. Okay, if you want to have a break, just tell me, we can have a break over here. Little 5 minute 10 minute break. I will just play some videos for all of you people, so the stream doesn't look like it stop. And even I can have a break, you can have a break. Let me just drink water. So like I was telling to all you people, that I give you three scenarios of a chart pattern which can happen, the three possibilities which can happen in the market. The first possibility says that you enter at the breakout like the normal one. Second possibility says you wait, because might be chances that it can give you the fake breakout. It can again come, grab the liquidity and then shoot up. And there are the second and the third possibility that it will never give you. It will give you a breakout. It will try to think, it will make you think that it is a retracement, it is a retrace and all those things, that I came for the liquidity grab, but it won't, and it will fall down. Okay, these are the three scenarios, three possibilities which can happen at the time of the double bottom chart pattern. Okay, cool. About the target, what kind of target you can expect from this market? It's very pretty simple. I will tell you. Just go on this bar. You can see this bar. It's a scale. Just click on it, and then whatever is the distance between this support and the neckline, which is 2.5%, this is the exact profit you can expect from the market from that breakout. 2.5%, we will just go from here 2.5%, 2.15% or something like that. Yeah, this is the profit which we can get. The distance between the neckline, this is the neckline, and the support, this is the two thing, the distance, whatever percentage ratio. Error, YouTube is not receiving enough video to maintain smooth streaming such as viewer will experience. Why? What happened? Why we are not receiving enough video to maintain? It's going smooth. I'll just refresh it. सीधे मोकल्ला. I don't know what is happening. And it's fine. So the major target for all of you people should be this, the distance between the neckline and the support line. Okay, whatever is the distance between those will be your target, and you can achieve it above. Simple. Got it? Okay. Now let's see the live examples of this thing. I'll just delete it. Let's see the live examples of double bottom chart pattern. I will give you one thing at this thing as well. If you feel that looking at the chart pattern whenever it is in the bar scenario and it makes you a little hard to analyze and you cannot see it, just go into this candle option, turn it into the line, and this thing will make you see in very accurately. See, you can clearly see. If I change it to the candle, can you see that there is a double bottom pattern over here? No. But when I change it to the line, I can clearly see the double bottom pattern over here. Okay. From the neckline you buy, you got the target and every of those things. Okay. I will show you. Let's have this example. Market came down, made a support. You draw the support line. What happened? Hey, still not started or what, bro? This line is just under us. Why it is just under us? Okay. Sorry for that. If I remove my chair like this, that wire gets stuck, which is just below our chair. Why? No idea. Okay, leave that thing. We were discussing why Ethereum. We're discussing Bitcoin. Okay, so this is a double bottom pattern. Whenever we see the market has taken one sort of a support, we create a support line at that point. We wait for the market to go up. Once it takes the another resistance, the small resistance. Okay, the resistance should not be like this. Like the resistance should The resistance should not be like this. Like at the same point at the entry point, like when the market started to have a downtrend. At that point, we should not have the resistance. Resistance should be at least half or more than half of that line, that W line, the straight down line which you are seeing. This is a straight down line. This neckline either should be the half of this line or below the half. Okay, not more than. We saw this thing, resistance, neckline resistance. We draw a line at that point. And then we wait for the market to come down again. See, you can clearly see over here that the pattern has not respected our thing, which is it should be the same, but it can have a little difference. We can clearly see it is having a little difference. We came at the neck point, and from the neck point breakout, we have seen that there was no liquidity grab, there was no fake breakouts or all those kind of stuff. We saw the market went up straight. And let's just calculate the distance. See, the distance from here to the neckline is one second, I will calculate in the upside. From the this point to this point is 0.38. okay, this is the same 0.38 and it gave us 0.87. like sometime it gives you a lot, but 0.38, yes, whatever the distance between this is an exact thing which you can get for very sure. For very sure you will get 0.38 again. It can be more as well. Okay, do not be in that scenario. It can be more as well. Okay, this is the one example. Let's just go and check out the other examples as well. Let's make it in a candle. Try to learn to identify in a candle. I know the lines are very easy for you to know, but try to identify in a candle. It saves the time. Okay, a good example of a double bottom pattern again. Cool. So market downtrend, condition matched, took one support, went up, took resistance, came down, condition matched, drawing the line at the neckline and the support line, waiting for it to give us a breakout, and from there we can have our entry point. We can have our profit or whatever you want to do. Good. This is the second. Another again you can clearly see this is a very general occurring pattern. That's why I'm telling you regarding this pattern, because it's a very general downtrend, took a support, went up, we draw a line at support, took a resistance, we draw a line at resistance. Now what we do, we wait the market will come again. If it takes a resistance, we are very sure that it is a double bottom chart pattern. From there it will go up. Now we wait over here. If it's taking the resistance, it's totally fine, let it take a resistance. But if it's not, if it's giving a breakout, wait for the market to give a breakout, enter at that point, and then you can have a good amount of that. What kind of target? The target will be from the support line to the resistance line is 1.45. The same profit we can have from here. It's more than 1.45. Yeah, 1.45 is here. We got more than, we got almost 2% of profit over here. So this is the target. This is a very easy, like most of the people gets afraid or doesn't know where and how to they can have the target, how much take profit I can keep, how much risk reward should I carry, and all those things. In a double bottom and double top pattern is very simple. Calculate the distance between the support and the resistance point, whatever the range is, have that kind of profit above. Simple as that. Okay. In this scenario, previously we saw that the market went straight up, but in this scenario we can clearly see the market take a in this scenario market give us a breakout, lot of people entered, again came down to retest himself and then shoot up. This is that retest, liquidity grab, whatever you want to call it, you can call it. These are the things which happens in the market. Okay, and you have to be aware of it. I want to see one more example where the double bottom pattern failed to give a double bottom pattern. But it was in an uptrend. See, double bottom pattern, double bottom pattern, double top pattern. There are so many places where you will see this M and W pattern. Okay, these are the most common chart pattern you can have, and you can actually trade with it. Safe way to trade, easy way to trade, whatever you want to call it. It's very simple. Any one place I'm finding where the pattern went wrong. Rather than giving an uptrend, it gave a downtrend, because you should be aware of all the possibilities which can happen in the market. I will consider it. I can consider a downtrend. First bottom came up, second bottom came up. At the neckline, it should give you an uptrend, but it gave you a downtrend. Got it? This is a, I will, if I change it in the line. Okay, in the line it is more confusing. It is good at this point. Downtrend, first bottom, the resistance, second bottom. It should, at the neckline, it should cross and go above, but rather than doing it, it fall down. Failed. So again, three scenario we saw, double bottom pattern as well. One, which is the as accurate as the book says, at the neckline, enter at the breakout and you can have the profit. Second, we saw the fake breakout, which can happen and it can affect your maybe the profit. It may affect your stop losses. Your stop losses can hit, which can affect in the liquidity grab kind of situation. And the third, which you can clearly see, is a failed situation, where the chart pattern failed to give you an uptrend. As per the double bottom pattern, we know that it should give you an uptrend from there, and it failed. Got it? So three scenario we saw for double bottom pattern as well. Now let's just go, and I want to take a break right now here, but I want to continue as well. I'm in that scenario. Wait, should I continue? Because I want to have a break as well. Tired. Let's have one last chart pattern, and after that I will take a break. You wanna watch some news? I'll play one news for all of you people. I'll take one break and I will come back again. What kind of news? Iran launches missile, blah blah blah. I don't wanna know about this. Crypto live trading. World on the brink of World War III. You wanna watch this? Will crypto boom or go bust? Binance. What the fuck is this? See, Iran attack on Israel attack on Iran, stock market crash. That's the thing why I tell you that the war outside the world, whatever is happening, even though it's not related to the stock or economy or something, They are having war on their own terms, like whatever their decision and all of those things. But it affects the stock market. It affects the people's psychology, mentality of doing a trade. I have no idea which mint and all. I'm afraid of the copyright situation. It's fine. Let's not play video for people. Maybe a copyright will happen. That's why I'm afraid. So I'll just come. It's already been 2 hours and 30 minutes live has already been done. More 1.5 an hour live to go. And I will just take a very short break. I will come back and then we will discuss about the rest of the chart pattern as well. Okay, cool. Thank you so much, people. I will just be back. You also have a break. I will also have a break. I really want to play something for all of people, but I'm afraid of the copyright situations because there are 2 to 3 videos of our content has got some violations. So if I play some other videos, maybe it will affect. So it's best let's not play anything. I will come back again. Just give me 5 to 10 minutes, okay? And I'm back. Once again. Okay, people, I believe you are back. The break is over. The next pattern we are going to talk about is head and shoulder. It's not a shampoo, it's a chart pattern. Hey. And shoulder chart pattern. Okay, and it's a bearish, no, just bearish. So just a bearish chart pattern. Okay. Okay, so next pattern we are going to talk about is head and shoulder pattern. Head and shoulder pattern is a bearish chart pattern. As you know, bearish, which says that it was an uptrend but it changed to a downtrend. Pretty simple. Let me just draw that pattern for all of you people. It went up, one shoulder, came down, the head, came down the same, came down the same, and then we are having this pattern. Okay, cool. So now the conditions. First most condition is that the pattern should form in an uptrend. As it's a reversal chart pattern we are talking about, and it's a bearish, so for the market to give you a bearish movement, that is basically a downtrend, the market should be first in an uptrend. Okay, the market should be in an uptrend. So first we are having a dominance of which people? Yes, we are having a dominance of an uptrend people, and obviously as I draw it in a very line wise, I know the market will be something like this, okay, an uptrend, like it's coming down, it's going up, it's coming down, it's going up. It won't be a straight, but you have to analyze a pattern. When you are combining the candles, it gives you one pattern. So this major top, this will be acting as your first resistance, which we called as the shoulder. This is a shoulder. When you will see, this will look like this is a head, and this is the first shoulder, this is the second shoulder, and that's the person. You can see, you can have an eye, you can have this kind of look like a Punjabi guy right now. Why? Okay, so the first dominance of the market was to whom? It was for the buyers. The buyers were dominant. They made the market go up. At some point, the strength, the probability changed from the majority of the buyers changed to the little of the sellers. It indicates us, whenever the majority is changing, it indicates us that maybe a trend change can happen. That's the reason why the majority changes. Okay, the first majority changes, it came down, At that point again, the buyers came into the action. The buyer came into the dominance. From there again the market went up, and this time you will notice one very specific thing, that from the previous resistance, this is the previous resistance, if you just draw the line from here, the head will cross that line and it will go up. This is the second condition for all of you people. Second condition says, first, and uptrend. Second condition says that head, this is the head, should be always above the shoulder. Okay, got it? The head, this is a condition you should know regarding this. The head should be always and always should be above the shoulders. So the shoulder line will be the same again. It can be either the same, at the same point it can take the resistance, the shoulder, or it can be little up or it can be little down. Doesn't matter. Little up, little down doesn't matter, but if it's way low, then it matters. But the first condition, uptrend. Second condition, the head should be above the both shoulder. Third condition, the shoulder should be either at the same resistance level or it can be little up and little down. That is totally fine. What is happening in the chart pattern? It is just changing the reversal sign. First it went to the buyers. The buyer has dominance, created one resistance point. From the resistance we saw the market coming down. Okay, from that point we saw another support, a support point. This is another support. Is what? The support is basically a neckline. Okay, a neckline we saw, we created. I will create that line. Okay, I made one line at the neckline. Okay, from that point, and I also made one line at resistance. Till this point we don't know, previously something will, I will make that happen. Okay, you don't have to worry about this thing. Let's just delete and we'll create it one by one. Okay, first let's see, the market has the dominance, it went up. From here we created our first resistance. You can clearly see this is a resistance point. The majority of the buyer changed into the sellers and it went down. And as simple as the double top and double bottom pattern, exactly same. We draw one line at the resistance point, and when it takes the support, we draw one line at the support point. Now what we do, we wait. We wait for market to either, see, if it's a double bottom pattern, it will take the resistance from the same point and it will come down. But as the pattern is changing, this is what we should know about. We created the resistance at this one line, we wait. If it's crossing above and going above, let it go. We still do not enter in the market. We don't call this as a breakout, that from the resistance it got a breakout and it is going up. No, we don't call it a breakout. Now we observe this thing. If it's falling down, if it's taking a support at this point, we'll call it as a demand. Sorry, we will call it as an uptrend, because see, and higher high formation is forming. This is a high, created a low, another higher high. This is a low, lower low. This is higher high, higher than this, higher high, higher low, higher high, higher low, and price action which is telling us an uptrend is coming. But if this doesn't happen, let's make it come over here. If it doesn't takes a support and goes up, if it is taking a resistance and coming down, but taking support at a same exact point, this is the same exact point where they are taking support from the previous thing, okay. Sorry. Yeah, from the previous thing it has taken the support, market came down, break that thing, came down and take the support from the exact the same point where it has taken the support before. This becomes our what? Neckline support. Got it? Cool. After that, when our market is going up, and it takes the same resistance from the previous one. Now there are chances that the market can go up from here as well. But if it's taking the same thing from where the market has taken the resistance, which is high chances of calling it as a support is forming over here. After that we'll look out for this scenario. The market, as it's a resistance is there, it's a shoulder. So shoulder resistance will look out. If it taking the if it's breaking out at this scenario, because that's the neckline for us. This is a neckline. From the neckline, if it breaks out, then there are high chances that market is going to go for bearish. The market gave us a neckline. If it gives a breakout, we'll go for this scenario. This is how a head and shoulder pattern forms. First, the dominance of the buyers changing to the sellers, changing into the buyer, changing to sellers, changing into the buyer, changing into the sellers. From the neckline, if we see the breakout, we will go for the downside. And again, what will be your target? Your target will be target will be from the height of the top resistance to the neckline. It is 3.68 something, and the same we will look for the down. The same we will look for the down. This is the target which we can look for. Okay, this is the target which we will look for. The market went up, took a resistance. This is your resistance line. Whenever you see resistance, just draw the line. Whenever you see the support, just draw the support and wait for it to form a chart pattern. If it's a double bottom, it will form if it's a double top, it will from here itself, it will give you this signal. But if it's not, it will go up. If it's going up, then you have to wait for it to form this resistance zone. If this and this are forming at a very same point or little bit different, then yes, it is an head and shoulder pattern. This is head and shoulder pattern, and it is meant to be bearish. At what point you will enter in the market? At the breakout. Again, same target, which is from the distance of the top resistance to the support, that you can expect that amount of target over here from the bottom, from the breakout. Okay, this is I came back again. This is the first scenario. Second scenario is second scenario is either maybe rather than having this breakout, it can go up from here to retrace himself. That is a fake breakout can happen, and from there we can have another go down. Third, that it will never ever go down and it will give you a fake signal, and that is a fake chart pattern. Three scenario can happen. So that's why I am not fooling you anything that this is exactly what is going to happen. I told you all the truth, the book knowledge, that knowledge which can happen in the market, which may not happen in the market. All those scenario I have told you already. Three scenario which can happen: breakout, fake breakout, or the chart never gives you a downtrend. That is, according to the bearish chart pattern, it should give you bearish, it will never give you bearish pattern. Very simple to understand. I know it feels little hard to understand at the point of the diagram, but let's just go and understand it into a chart pattern. It will be very easy for you to understand in a chart pattern. Let's find a head and shoulder chart pattern first. Okay, one head and shoulder chart pattern which was supposed to give you a bearish movement, but it didn't give. Okay, so let's just draw the market. Okay, it's in a downtrend. It's in a downtrend. A major, very small uptrend created a resistance. We draw one line at a resistance, and then it came down. We draw one line at a support. This is our neckline. Head and shoulder pattern is forming over here. The market went up, took resistance, came down. This is a head. Again, this is a shoulder. Okay. From there, it gave you a breakout, a fake signal that we have to enter for a downside, and a major we can have a bearish one because of the head and shoulder pattern which has been created over here. But at this point, you can clearly see it didn't respected that thing. It was that one of those three scenarios where the chart pattern is void. It didn't give you a bearish movement, and from that we can have an uptrend movement. Okay. This was the first scenario. Let's go for the second scenario where either we can have a breakout or we cannot have a breakout. but very less. Okay, this is one of the head and shoulder pattern. We have to look over here. Market uptrend, correct. First place to take resistance, marked. Second place to take resistance, sorry, first place to take support, marked. Now what we have to do, just wait for it to make a chart pattern and follow it by the line. It went up, came down, make a shoulder, went up, took a resistance, came down, make a head. Now another, it made a shoulder. Now you can clearly see that's one point that it is not at the same level, but I told you there can be the difference, that is totally fine. Not the major ones, minor ones, totally fine. This is one of the minor ones. This is a very small gap which needs to be filled, and that is totally fine. Okay. After that, we saw a breakdown. People enter at this point, but again the market went up to retest himself, and then it fall down. Now, like I told you, the distance. Just grab the distance from here to the support point, 1.6%. Now let's just see the distance from the breakout to this point. It's 1.84%. 1.6 was the distance between the head resistance and the shoulder support. That's a distance, that's a target, and your target has been achieved very simply, very easily. This is the second scenario. This is the second scenario where we are having a fake breakout. This is a fake breakout. Breakout happened, again it went up, and then it had a breakout. This is a fake breakout scenario. Now let's understand the last scenario. Let's try to find out the last scenario where there is no breakout, nothing, and we simply fall down. I can consider it as, yeah, I can consider it as a, yeah. Market uptrend, it had a resistance. I drew point of resistance. The shoulder is above, my condition fulfilled. Another support market took, I drew line at a support. Now the whole chart pattern is very clear in front of me. Shoulder, head, shoulder, and from here it gave us breakout. There is no fake breakout. This is a clear cut breakout over here. The market gave us, this is a distance from shoulder, 2.5%. We'll wait, we'll calculate from the breakout. We got almost 5%, almost 5%. So the 2.5% which you need is already achieved, which you don't need to worry about. Okay, cool. Okay, this is our third scenario. First we saw no chart pattern didn't make the move which it's supposed to make first, where it's supposed to give you the downfall, but rather than giving downfall it went up, void. Second scenario we saw where the market took a fake breakout. It gave you breakout, again it went up, and from there it fall down. This is just to grab either the liquidity or to retest himself. Is it ready to fall down or not? Third scenario, which is this, there is no fake breakout, there is no wrong scenario, a complete clean downtrend we can see. Okay, cool. Okay. Now let's talk about, I just want to mark one thing. Okay, this is the place where I want to mark because this kind of patterns are not easy to find. I marked it. Now let's just go. Okay. Okay, cool. Now the third pattern, fourth pattern, inverse head and shoulder pattern is also there. I'm not talking about inverse head and shoulder pattern because it's not that common to occur in the chart pattern. It is little rare to occur in the chart pattern. So the one which are little rare to occur in chart pattern, I'm not covering those things. The one which is daily or you can use it a lot of time, those are the ones which I'm covering. The fourth pattern I'm talking about is a rising wedge. I will type the name, sorry. Rising wedge C dot P. C dot P chart pattern. I don't want to write it again and again. Same again, this is a reversal chart pattern and this one is again the bearish C dot P. Bearish chart pattern. Okay. Rising wedge chart pattern. What is a rising wedge chart pattern? How does it look? What happens? We'll cover it with each and every detail. First condition, as it's a bearish, obviously the chart should form in an uptrend. First, an uptrend we saw. Okay. The second condition, I will just draw the chart pattern for all of you people. Okay. First, a little up, a little down, a little up, and complete fall. Okay, it looks very difficult to understand, but trust me, it is the most simple to understand. Charging. Okay. Let's understand. First, we'll go by condition to condition, how it is formed, how to identify, and every other things. As it's a bearish chart pattern, one thing for very sure, it should be in an uptrend. Understood the condition? Good. Other than that, you need to understand this one thing, that what is the meaning of a rising wedge. That's a condition which you will look for. Okay, I will tell you. Once the market was in uptrend, the dominance is for which people? The dominance is for the buyers. Okay, at this point the market is going up. At this point it creates one resistance point. This is the resistance 1, R1. It is created from where the market fall, created S1. Now at this point we don't draw the lines, we wait for some scenarios. Okay, S1, from there the market went up, created R2, came down, created S2, came up, created R3, came down, created S3, came up, created R4. Now there is one very common thing which you will notice, that it looks like it is rising above. Got it? So the condition which we supposed to look for is the R1 should be below R2. R2 should be above R1. Similarly, R3 should be above R2 and R4 should be above resistance 3. Okay, so this is the condition. First, uptrend. Second condition, every resistance which is created, the next resistance should be above the previous one. It is a condition which you should know for. It is called as rising wedge chart pattern. First condition, uptrend. Second condition, every resistance should be above the previous one. R2 above the R1, R3 above the R2, R4 above the R3. Got it? Pretty simple to understand. In the same way, the resistance is what happening? Resistance is increasing, but at the same point the support is decreasing. The support is decreasing. It is creating a small path, like it is decreasing its time. This, for example, this is the support S1, S2. You can clearly see that S2 is shorter than the S1. S3 is more shorter than S2. Third condition, the support should be smaller in every time. Whenever the market is taking support, it should be smaller. Why I told you not to draw the line? Because we draw a horizontal line. In this scenario, whenever you see such kind of situation that R1 happened, S1 happened, you want to draw the line, you draw the line, it is totally fine. But at this point you should wait and look for this. If the resistance is going above, wait, just observe. When the market comes down and the support is forming little above the previous one, just wait. At that point you just draw the horizontal line, the slanting line from matching the R1, R2, S1, S2. That's all. And let it happen. If it's making the same scenario, if it's following the same trend line, then yes, you are confirmed that it is a rising wedge. Confirmed by how? The resistance is increasing and the support is decreasing. Got it? Okay. From that point, you have to wait for a breakout. See, there are scenario, maybe there will be just 2 supports, maybe there will be just 3 resistance, not the 4 or not the 3 support. It depends on the market at that point. If the market wants to make 4 resistance, it can make 4 resistance. If the market wants to make just 2 resistance, it can make a 2 resistance. It depends on the market. Generally, it makes the 3 resistance and 2 supports. At the third support, it will give you a breakout and it will give you a downfall. Okay. It will give you a breakout and it will give you a downfall from there. This is the downfall which we have to catch. This is a breakout which we have to catch. There will be one candle which give you a breakout. At that point we enter. Again, what will be the target, profit target? Now, You extend this line, this horizontal line, and again the same scenario from the R1 to this is the S1. You calculate the distance between those things. The distance between those things will be the distance of the target which you can achieve very easily, like a compulsory target you can consider. A compulsory target will be from R1 to the S1. That is a compulsory target which you can get. Other than that, it looks like this. Resistance will be increasing at each and every point, higher, higher, higher. Support will be decreasing, decreasing, decreasing. Okay. This is. First support was here. Then the market took support at very first. It didn't came to the first support. It tells us that an very early changes of market is about to happen. Like the market has a 50-50 scenario going on. Very strong support, strong resistance, strong support, strong resistance, strong support, strong resistance is happening. R1 made the market go down, support came. S2 take support early, which means the dominance of the majority of the buyers are there in the market, but at the same point the resistance of the market are also the sellers dominance is also there in the market. Okay. They both will be higher. Support will be higher than the previous one. The resistance will be higher than the previous one. Got it? Now let's just check out this scenario in the real life. It will be very hard for you to analyze it in the real life. That's why I saw at that moment and I made a bracket. Let's just find that bracket. This is head and shoulder. Yes, this is that bracket. Okay. I will create that line with a path so that you can see market went up first, second, third, fourth. Like this is the point where it should have given a breakout, a false breakout, and this is the market. Okay, now let's just match the lines. Let's just match the line. This is a rising. Sometime it will be very complicated for you to understand, but you need to have a very good eye to have it. Just see resistance. Just see the resistance is increasing and so is the support. You draw the line from this point to this, capturing all the resistance at one place. Okay, and then the same you are drawing a line capturing the support at the same place. If you extend it somewhere, it will create that rectangle triangle pattern. Okay. Yeah, shit. This was that point. Okay. So this is the rising wedge. I will little clear the junks. Okay. And I will make this thing a little thick. You can clearly see that pattern went up, resistance R1, this is our R1, condition matched. First it should be in an uptrend, it is an uptrend. R1 came down, S1. We waited for the moment. The next R1 became above the previous one. Satisfied our condition, first condition satisfied. Then the next S2 came and we saw that S2 is also higher than the previous one. Satisfied our third condition. From there the market went up, created an R3. Again the R3 is above the R2, satisfied our condition. From there we saw the market fall down. But this is one of those conditions, like I told you, market always chart pattern has three conditions. One, the plain simple chart pattern. Second, fake breakout, or third, it will never happen. So this is the fake breakout scenario. The market gave us a breakout, again it went up, and from there it came down. And now regarding the target thing, what can be your target, what thing you need to achieve? Like I told you, you need to calculate the distance between what? The R1 and the S1. This is the R1 and this is the S1. I will come down. What is it? 2.53%. Okay, 2.53%. Cool. From there, wait a second. From the breakout, this was the breakout. Okay, let's consider this is a breakout because this is a fake breakout and this is the genuine breakout happened. From here, we have to capture this. It gave us 6% of profit, but actually we needed how much only? 2 point some percent, 2.5 or 2.6. This is where our 2.4% was already covered. These are the scenario. This is how you can take the profit and enter. You know already breakout is where you enter, but after the breakout you wait for. I prefer to wait to see a fake breakout. This is my thing. Okay, I prefer to wait and look for a little small fake breakouts. If there is a fake breakout, then I enter in the market because I know liquidity grab, the little reality of the market, how they grab it, why they grab it, why they want our liquidity and every of those things. I am back. Let's start. Rajashani, bearfish. No, it was not bearfish. It was a mistake. And then equal to hashtag star. What happened to Rajashani? Are you going crazy? You are one of those purple minions, I feel. In the minions there are the purple minions who are like the full, like their hairs are this and they are all time crazy, like I will eat you something. Maybe, yeah. I feel Rajesh Annamalai is the purple minion. Yeah, so this is the rising wedge. Let's try to find out. This is one of those fake breakout scenario. Okay, this is a fake breakout scenario. Fake breakout. It came down, gave a breakout, again went up, and that too with a big candle so that it can fool the people, and from there came down. Chart pattern works very best in the higher time frame. This is a 1 hour time frame, so chart pattern works in higher time frame in a very best way. What? Why? What? So this is the scenario which happens in the market. Okay, let's try to find out the next example, next scenario of the rising wedge, the normal one and the fake one as well. Okay, kind of like we can consider, but the condition doesn't match because it is forming in a downtrend, so we'll say no for it. We have to find uptrend and that pattern. Okay, yeah, I mean like this can be, but this is one of those pattern, like this is that pattern, like the second scenario where it gave us a complete breakout, like as it's supposed to give, it gave us. Let me just show you. The market is in an uptrend. This is an uptrend, right? First R1 came down, R2 came down, support, again went up, R3, from there straight up down. Now it is little difficult for you to understand the chart pattern, but let me just make the path. Where was here? Uptrend, first R1, R2, sorry, S1, R2, S2, R3, and then we had a downfall. This is our downfall. Now if we just make it in a chart pattern, you can clearly see lines. Yeah, we'll draw the line. This is our line, our condition. I will show you every condition that is matching, and this is exactly how you have to find the chart pattern. Okay, not all the time the chart pattern are very easily available for you to check out and every of those things. Okay. Okay, cool. Rising wedge pattern, first condition, uptrend, check. Second condition says that all the resistance should be above the previous one, R1, R2, R3. We saw one and very simple thing, that R3 is higher than the R2, R2 is higher than the R1. Same goes for S1, S2. If I draw the line over here, S2 is higher than the S1. Simple, all condition matched. Now we wait for the breakout. When the breakout happened, we will calculate the distance between R1 and our S1, which went till here. If you see, 2.41. From here, the breakout, the straight breakout, it didn't give you fake breakout or nothing. From the breakout, we'll calculate, and we can clearly see 2.81, more than just 20%, 40%, 0.40% more. It told us to give, it will give us 2.41 and it gave us 2.81. This is your target. This is how you will find the chart patterns and every of those things, and how you have to enter. Now let's find the last scenario of the rising wedge pattern, and which never gave us that pattern, so that you are aware of all those three scenarios. Let's be fair. तेरा भाई समय पर ए बीच और मेरे बीच में आधे खाली जमना है, दिल से निकला है. Rising wedge pattern, this is a very good example of rising wedge pattern, and very small, and even a very small one. Okay, I need to give you, because this one is a very proper one. Uptrend, R1, S1, R2, S2. Okay, the close is over here, the close is over here, and the close, where is the close is over here, and from there we have seen a straight up downfall. Let me just change little thickness to 2 so that you can see it little clearly, and this thickness to 3, this and 3. 2 is very slow. Okay, 3. Resistance line. Matched. Same we will do for the support. we matched the S1 R1. Okay, let's just name it. This is our R1 first condition, uptrend R1. From there we fall S1. We created our two R1 S1. Now we just have to line. This is the line which I created. Our R2, this is our R2 above the R1. This is our R2. And from there we fall down S2. Same, R2 is higher than the R1, condition applied. S2 is higher than the S1, condition cleared. R3, this is our R3. This is R2's line, and our R3 is above the R2. And from there we got a breakout and we fall down. What is the distance between R1 and S1? 1.6. What is the target you can achieve very easily? 1.6. But it gave you more than 5. Okay, 1.6 was very easily achieved. This is one of those patterns. I cannot find the last thing. Okay, it's fine, I cannot find it. It should be here somewhere, but I cannot find it. Same thing. Rising wedge is also like general occurring chart pattern, so you should look for that as well. Okay, cool, it's fine, just leave it. Done. So these are the one of those chart pattern which I want to tell you all people, which comes very commonly in the market, which you can have a watch for. You learn to identify it, and very simple. If you are feeling little difficult to see that pattern, just go here and change it to the lines. Okay, and whenever you are making the R1 S1, try to avoid this middle stuffs, because in the lines, whenever you make the line, there will be lot of up down, lot of up down, lot of up down. For example, I will tell you. Okay, so this is one top, second top, and one top, one bottom, second top, and then fall. You can draw a neckline, it will work the exact same only. You don't have to consider the exact stuff. Like this is one of the double bottom pattern over here. Okay, and there are more such things you can do. Just change it to the line. Try to practice it a lot in your home with this paper trading and every of those things, so that you can be very accurate in the chart pattern, because it helps you to analyze the market. And chart pattern works most of the time. It works, yes, it works, but it's just like be aware of these three scenarios. Like I told you, one, it can be exactly like the book said. Second, it can give you a fake breakout, or third, it will never happen. Okay, these are the three possibility which market can give you. It depends on the market now whether it wants to make you like in that scenario, whether it want to put you in that scenario or it doesn't want to put you in that scenario. It depends on what liquidity your market is having, what kind of money. If there is not good amount of money, yes, inflows. If there is a lot of outflows, market will try to grab the liquidity from you people. Try to avoid to put stop losses in such scenarios where there is such scenario where there is a neckline. Try to avoid to put stop loss in the neckline. According to me, because I do those kind of scenario, I don't put stop loss because I believe it is there to collect liquidity from the people, for the market. If I'm just giving the money, if I just have to give the money randomly to the people, I will just give it, right? If I know this thing can happen, then I don't put stop loss. But I'm not telling you that it is compulsory for you. It is my thing. That's what I do. You don't have to follow me. If you want to do the this thing, like if you want to do risk management, you don't have a very big capital. If your capital is below 1000 USDT, 500, 10,000 or something, have stop loss. If your capital is low, stop loss is very necessary. If your capital is not low, then you don't have stop loss. Then you can take a risk, because not having a stop loss is taking a risk. It's not the same thing where you are just like in the market and you don't worry about, because if you don't put stop losses, and as you know, the crypto market is a very liquidate market, sorry, very volatile market, where anything can happen in 5 minutes, 1 hour, 2 hour. A huge crash or huge up can happen. Okay, so in that period of time, if you don't put a stop loss, your capital can be liquidated. The whole capital will be gone, whole, and we don't have that amount to lose everything. So yes, putting stop loss is a great thing, but just I know that the market makes some movements, such things, to grab the liquidity from the people, to manipulate all of you people, us basically. That's why I don't do it. Oh, I found out actually. I found out the rising wedge fail of a rising wedge. Okay. First, let me draw the rising wedge. Uptrend, R1, S1, R2. Okay. There are 2 to 3 S2s are forming. Okay, sorry, I forgot 2 to 3 in between. R1, S1, R2, S2, R3, S3, and shoot up. Let me zoom it and make it a little perfect. Okay. A little perfect. A bit. This is the support the market has taken actually. Yes. And this is the second one the market has taken. Okay. Third, this will become our R3, this will become our S3, and from here this will become our this. Let's continue very accurately and then shoot up. Okay. Okay, cool. So let's name it. This becomes our R1, S1, R2, S2, R3, S3, R4, S4, and then straight up. The conditions are matching. It's an uptrend. It is an uptrend. Every resistance is higher than the previous one. This is higher than R3. R3 is higher than R2. R2 is higher than R1. You can clearly see a gap between every of those resistance. Same will happen for the support, like S4 is higher than S3, S3 is higher than S2, S2 is higher than S1. All the conditions are matched. Now we draw the line. I will show you the line as well, the breakout point and every of those things. The line, let's just draw the line. This is that line. Okay. Now the next line for the support. And this is that line. Okay. So we can clearly see over here that we gave a breakout. Market tried to give a fake breakout over here. It came down of the support. From that it went straight up, which is not supposed to happen. This is not supposed to happen. This is a rising wedge. It should have fall from here, and it's a reversal chart pattern. As this chart pattern. Okay, so as a reversal chart pattern, uptrend and downtrend should have happened, but it didn't happen. So for the rising wedge as well, I showed you three different patterns. One where it happened exactly, second where it gave a fake breakout, and third where it never happened. The chart pattern completely nullified. And this is that actually pattern where the market grabs the most of the liquidity. Okay, cool. We should be safe from this pattern where the chart pattern is not even working out. This is the pattern from which we should be safe. Now just 20 minutes are left for my live stream, and I'm bored to talk about chart pattern. We'll continue the chart pattern tomorrow. Let's do some analysis of the market. What happened to the market, what is going on in the market, and every of the stuff. Okay, see. Can be. One, two, three, four, five. A, B, C. The market has made a 5 wave already, and it is right now making the A wave, A, B, C. We know already this, like when we learned the 5 wave theory. Right now we can clearly see in an hourly situation, the market is making a 5 waves. The 5 waves are completed already. In 5 wave, we can clearly see the third wave is the longest wave and the fifth wave has ended. From where the A has started, we can see the market may go up from here, and again we can see a little downfall according to the 5 wave theory, which makes the market change the trend and every of the stuffs. Okay, so this is the one thing which I saw in the market. 5 wave theory is there. Other than that, let's see about the supply and demand zone of the market so that you can know where to enter. Like I told you in the starting itself that the market is going in a range. Okay, major. Okay, let me just okay, let's just create a rectangle from this point to this point, very small one, and let's extend it. Okay, this is our supply, no sorry, this is our demand zone. Okay, the previous demand zone from where the market went up. So this can the market may be trying to do the consolidation near the supply demand zone. Maybe from here we can see a scenario, a consolidation can happen, and from there a shoot up we can also see. But at the same point, a very strong supply zone is also sitting. Any fair value gap which we can see. Got it. This is the supply zone of the market, the current scenario I'm talking about, from where the market has fallen down, supply zone, and a demand zone is sitting at here, where it has taken, if you can notice one very specific thing, that market has taken the multiple supports from there. Multiple time the market tried to come down, and from there it has shoot up to take a demand. There are high chances right now we are somewhere in the middle, so let's just wait. If you want to enter into the market, wait for market to come either somewhere near the demand zone and then go up to, for this can be your target, or you can wait for the market to reach to the supply zone. From there you can go for the short sell for doing the short sell till the point it reaches to demand zone. Okay, these are the two scenario. If we check out in the 5 minute for the time frame, what is happening in the 5 minute? In 5 minutes we can see 2 to 3 demand zones, because like I told you a lot of time, this demand zone, whenever you are doing the multiple time frame analysis, wherever you are doing a trade, if you are doing a trade in 5 minutes, consider the 5 minute demand zone. If you are doing a trading in 1 hour, see, have a reference. Having a reference is not an issue, but sometimes you will feel like the 1 hour demand zone is this big, and whatever the small movements which is happening inside, those you will miss. That's why whenever you are feeling that it is too big of demand zone, come to the 5 minute time frame wherever you are trading, 15 minute, 30 minute, 45, whatever time frame you are trading, come to that time frame and find out the, like, adjust your demand zone comparing to the 1 hour. Okay, that's all, nothing else you have to do. You just have to adjust it. Nice. This is in 5 minutes we can see a sideways market. In 1 hour we can see an uptrend market. Overall it is a downtrend. Supply zone, major supply zone. Maybe this is a demand built up we are getting over here. Yeah, this thing can happen, a straight up. So this is a demand built up. Check out this. Keep an eye on this consolidation. Keep an eye on this consolidation. This is acting as a demand build up right now, because on the previously, if I just drag this thing out, you can clearly see that this was a point where the market made a major up movement, okay, and it has taken from there also like a little small supports. So consider this as a demand build up, and your target can be this can be your target, the nearest supply zone, the first nearest supply zone. The major supply zone of 1 hour is this, but the nearest supply zone which we are looking for is this. So if you want to enter in the movement, first let this consolidation happen. Do not enter at the consolidation. Once the consolidation is broken, go for the long position, enter at this position. You will have this as your reward, and you can put the stop loss as this. You can easily get 2:3 risk reward ratio entry you can get. So this is the thing which I am telling you. This is a consolidation, or you can call it as a demand build up, and that's our supply zone. This is our supply zone for the market. So if you want to enter in this movement, you can check out this thing. This is my analysis. Like if you want to enter, this is a very great thing. Wait for this demand built up. If it crashes down, let it crash down. Okay, do not enter for a long position if it crashes down. I'm telling you, go for the long position, because it has been so long time the market has not went up again. Maybe this is a scenario where it can go up again. Other than that, other than that, there is nothing which we can see, nothing which we can have. That's the demand build up. Let's try to see where the market is trying to grab liquidity. Liquidity grab happened. I also want to check my judgment as well. Let's see. No Lux algo only I want. Smart money concept by Lux algo. Okay, checked. Mic check. Everything checked. Looks good. Let me also check last thing, fair value gap. See, respect this fair value gap. Okay, try to avoid this fair value gap if the market comes in this moment, because this has been place. Yeah, this is the fair value gap. You can clearly see the fair value gap was created, again tapped in, and it throwed the market down, legit down. The market went. Okay, so from this point, try not to enter at this position. If the market is going up, wait for this fair value gap to at least break. Okay, we can clearly see a very great up movement because of the fair value gap of this. Multiple times the market came. This is also a FVG of this green. Market came, tapped in, went up. Market came, tapped in, went up. Okay, but wait for this fair value gap as well. Maybe it will tap in and then it will throw again. So wait for these things. That's all thing which I wanted to tell you all people today. So my time is up. I will see you tomorrow by the same time. Go through my analysis, the demand built up, supply, fair value gaps, and every of those things. And I really happy that I'm back again. And thank you so much for all the people, all the love, all the things you given for me and every of those things. I really appreciate it. And thank you so much for all the people who have joined this live stream. I will see you tomorrow at the same timing, 12 to 4. And till that time, enjoy the other live stream as well. And I wish that do not forget to practice any of the stuffs which I have told you. Practice makes the man perfect, and man/woman perfect. Okay, so thanks so much for all the time we have back again. So thank you so much for all the time which we have spent together, and thanks so much for coming on the live stream. Do not forget to like, share, and subscribe to our channel, and also please give a lots and lots love to the ZBit X platform, because that will be one of our main platform where we'll go give our updates and everything. And trust me, today I don't know regarding the rewards which the market has supposed to give, like the ZBit are giving a reward referral and something like some money thing which they are giving, which I'm not fully aware of. Trust me, tomorrow I'll be fully aware of it and I will inform you regarding that. Till that time, please go and check out all those 3 platforms: GZBit, ZBitX, and ZBitX YouTube as well. Okay, follow, like, subscribe, and share it to the maximum people. Okay, till that